Okay, so let's start with the revision of our entire customs and FTP. Yes, so we'll go chapter wise so that even it will be easier for you to, check it from the textbook, relate it from the textbook. I'm starting with the first chapter, that is levy of and exemptions from custom duty. This revision I'm taking from the 4th edition revised book. If you have this book, you can refer it from here. So that it will be in a proper sequence. If you do not have this book, then you can refer it from whatever material you are following. Yes. Chalo, levy of and exemptions from custom duty. Very simple chapter, but very important. For sure, you're going to get question from this chapter. Yes, now first of all, when we study customs duty, there are two laws which are applicable. One is the Customs Act 1962 and the second one is the Customs Tariff Act 1975. Okay, these are the two statutes, these are the two laws that we have to study or consider while studying our customs law. Then ma'am, why this customs etc, when this is applicable, please try to understand. Okay, whenever you are importing any goods, at that time they are levying the custom duty. Okay, whenever you are exporting certain goods, okay, not all goods, when you are exporting certain goods, at that time also you are required to pay some export duty. The goods which the government does not want you to export, on that the government will levy the export duty. Okay, normally on exports there are no export duty applicable, but on certain goods there is still some export duty applicable. Okay, ma'am, why is this levied? Why is custom duty levied? Can we say whenever you are purchasing the same goods from India, can we say normal taxes will be applicable? Yes, and when you are importing those goods from other country, at that time those local taxes will not be applicable. So to bring it at par, okay, to bring it at par with local purchases, with local purchase taxes, customs duties was levied. Yes, now there are few definitions given here. Two things which I want to tell you specifically here is, first of all, Customs Act. Okay, Customs Act as well as the Customs Tariff Act, it is applicable to whole of India, including the state of Jammu Kashmir. Okay, then when we talk about waters, okay, so Indian territorial waters, just like your GST, Indian territorial waters will go up to 12 nautical miles. Okay, it will go up to 12 nautical miles from the baseline, and up to 12 nautical miles from the baseline, the entire customs law is applicable. Okay, but there is some exploitation, there is some exploration that can happen more deep into the waters also, or more ahead into the waters also. So they say that your custom waters, okay, your custom waters can extend up to 200 nautical miles from the baseline. Okay, just similar like your GST. So up to 12 nautical mile, all the provisions of GST law will apply. And when we go beyond 12 nautical miles, but up to 200 nautical miles, some provisions like confiscation provisions, arrest provisions, search provisions, these will be applicable as soon as you go beyond 12 nautical miles and up to 200 nautical miles. Okay, then after that, starting with the chapter now, that is talking about levy and exemptions. Now, what do you mean by levy? First of all, levy means the procedure of calculating, determining the liability. Okay, not calculating, but the procedure of determining the liability. That if so and so event occurs, example, if importation occurs, okay, or if exportation occurs, then in that case, customs duties will be applicable. That is the stage which is called as levy. Okay, once you know that customs duty is applicable, then you start with its calculation, which is nothing but the assessment. Okay, which is nothing but the assessment. Yes, once the duty is levied, once the duty is assessed, calculated, after that the officer is going to collect that amount of duty from you. Okay, now starting with the first section, that is section number 12. Section number 12 talks about the charging section. Okay, now every act, every law has its own charging section. Similarly, customs also has its own charging section, that is section number 12 of the Customs Act 1962. So they are telling that whenever you are importing any goods or whenever you are exporting any goods, then you will have to pay the custom duty. Custom duty at what rate? Custom duty at the rate which is notified in the Customs Tariff Act 1975 or any other rate for the time being in force. Okay, that is the first thing. Second thing is this custom duty will be applicable on both government goods as well as non-government goods. Means even if the government is importing, the duty will be applicable. Even if we are importing, then also the duty will be applicable. But yes, definitely there are some exemptions given to the government. Example, when the government imports some defense goods from the other countries, etc., on that they have exempted the customs duty. Right? This was told in section number 12, that is the charging section. Okay, now within this, now they have given you two bifurcation, that is about import and export. So now we know that at the time of import, can we say importation is one of the taxable event? That is, as soon as import happens, then we are liable to pay customs duty on that. Okay, now they have given a reference of few case laws here. Now what was determined in this garden silk mills? What was determined here? So now, whenever you are importing the goods, when will the liability to pay the customs duty arise? So the liability to pay the custom duty will arise as soon as the bill of entry is filed. See, the goods are coming into India, it is entering the territory of India. Okay, then for some time it is there into Indian waters, etc. So the question arises here is, when is the custom duty payable? So the custom duty liability will arise only when the bill of entry for home consumption is filed. Now you must have already studied that when you are importing the goods, either you can immediately clear the goods for home consumption, or you can first store the goods into warehouse and then you can clear it for home consumption. So ultimately, when you are clearing the goods for home consumption, at that time the import duty is going to arise. Okay, and similarly, when you're clearing the goods for warehousing, okay, when you're clearing the goods for warehousing, again at that time, the import duty will be applicable only when the goods are cleared from the warehouse. From the warehouse means you're clearing it from the warehouse and you're taking it for home consumption. Okay, only at that time the liability for customs duty is going to arise. And similarly, in case of export, I told you that on some goods export duty is applicable. So as soon as the goods cross the territorial waters of India, that is 12 nautical miles, at that time the customs duty will be payable on such exports. Am I clear with this? Yes, so this was everything here was given under section number 12. Section number 13 we will do it separately, which talks about pilferage. Then comes section number 14, which talks about valuation, which we will deal with it separately in the valuation chapter, that how to do the valuation of goods under customs. Right, then going on to the next section is very, very important, which you will use it while solving questions also. That is section number 15. That is, which dates rate of duty you will consider. Can we say customs duty can also keep on changing from time to time? So which dates rate of duty will you take for the purpose of paying the customs duty? Okay, now whatever we are going to study, this is not applicable for baggage and this is not applicable for importation by post. Okay, for them they have specified different dates altogether. Okay, now see, now in case when you are going to clear the goods for home consumption, means you have already decided that you are going to file the bill of entry for the purpose of clearance for home consumption, then which dates rate of customs duty will you take for the purpose of calculation? So it depends on by what mode are you importing your goods. If you are importing it by vehicle, then whatever was the date of arrival of that vehicle or the date of filing bill of entry, whichever is later. Okay, so bill of entry or the date of arrival of vehicle, whichever is later. When you are importing it by vessel, ship, etc., then whatever was the date of entry inwards to the vessel or the date of filing the bill of entry, whichever is later. Or whenever you are importing the goods by aircraft, then in such cases, the date of arrival of the aircraft or date of filing the bill of entry, whichever is later. So basically, whenever your mode of transportation is coming or whenever the entry inward was granted, that date or the date of filing the bill of entry, whichever is later. Okay, whichever is later, whichever is that particular date, on that date what is the rate of custom duty that will be applicable on such imports. Okay, then when the goods are cleared from a warehouse, in case of when you had imported the goods, you had kept it in the warehouse. See, while the goods are kept in the warehouse, the taxable event is not arise. But can we say once you clear the goods from the warehouse, now you will have to pay the customs duty on that? Yes. So here the relevant date is the date on which the bill of entry for home consumption is presented. That is, now you are presenting a bill of entry that, sir, I want to take my goods for home consumption. On that day, whatever is the rate of duty applicable, that as per that rate, you are required to pay the customs duty. Yes, and then in case of any other goods, the relevant date is the date of payment of duty. Means whenever you are paying the duty, okay, maybe there were certain goods on which it was the tax payment was escaped, and later the department came to know that the tax payment is escaped on these goods. So whenever they are taking, the customs duty from you, on that day, whatever is the rate, as per that rate, you will have to pay the customs duty. Yes, this was applicable for imported goods. Can you see this? This was applicable for imported goods. And similarly, under section number 16, they have given you for exported goods. That is, whenever you are exporting the goods, at that time, at what rate of duty are you required to pay that export duty? So, whenever the goods are entered for export under section number 50, irrespective of mode, by whatever mode you are exporting the goods, doesn't matter. The day when the proper officer passes the let export order, okay, proper officer passes the let export order and he permits that, okay, now you can do the export and now you can load the goods on the cargo on that day. Okay, let export, just remember this word, let export order. On whichever day this let export order was passed by the proper officer, on that day, whatever was the rate of custom duty, as per that rate of custom duty, will have to pay the customs. Yes, and in case of any other goods, then in again, whatever is the actual rate of payment of custom duty, that day, whatever is the rate, as per that, you will have to pay the customs duty. Yes, so this section number 15 and 16 is going to be important, because when you get the questions, they will give you multiple dates rate. Okay, at some places they will give you the rate of when the vehicle was entered into India. They will give you the rate when the bill of entry was filed. So you will have to choose, okay, out of these, whichever is later, that dates rate of custom duty you will be taking. Okay, then going on to the next one, that is there was a case law, that is Bharat Surfactants Private Limited. So here what was determined, what happened here was, basically there was a ship which was trying to enter into India. Okay, a ship which with goods. Okay, it wanted to come to India. The day when it wanted to come into India, on that day the rate of duty, let's say, was 12.5%. Okay, but at the port, okay, let's say at the port there was no space, so the customs authority did not give a clearance. They said that, oh, as of now we do not have space to park the ship here, so you please come back after a few days. So for some days the ship went to Karachi, and after that, after few days, the ship again came back to India when the final entry was granted. Okay, now the day when the entry was granted, on that day the rate of duty had already increased. Okay, when it made the first entry, at that time the rate was 12.5%. Later, when it made the final entry, the rate was 15%. So in such cases, which date will be considered as the date of entry inwards? The final date, when the ship has actually been granted the final entry, that date will be considered as the final entry inwards, and that rate will be considered as the relevant rate. Manageable till here? Yes, so this was all about my section number 16. So section number 12 was my charging section. 13 we are yet to do. 14 is going to talk about valuation, which we will study separately in the valuation chapter. Section number 15 talks about, in case of import, what is the rate of duty, on what date the rate of duty is to be taken. Yes, and then after that, section number 16, in case of export, which dates rate of duty are you going to take? Manageable till here? Yes. So till here, basically the first part of the chapter, very basic, very initial part of the chapter is done. Then let's go to the next part of the chapter, that is about the concessions. Okay, as of now we have simply completed the basic part of the chapter, the levy part of the chapter. Now let's go on to the next part, that is about the concessions, exemptions, etc. Yes, so that those concessions, exemptions, we will do it in three parts. Can you see this? Part A. Okay, similarly part A, part B and part C, three parts, three exemptions we are going to study here. First, let's do about this first concession, which is given under section number 20. Now, section number 20 talks about re-importation of goods. Means what has happened here? Please try to understand the purpose of this section. Okay, so now what they have done is, what they are telling us here is, first of all, let's say if I have exported some goods, okay, I have exported some goods after taking some duty benefits from the government. Okay, either I have taken some refund from the government or I have taken some tax benefit from the government because I have exported the goods. Okay, government is going to promote export, so it will give me some tax benefits. So what I did was, I exported the goods, I took some tax benefits. Now, after taking the tax benefits, I exported the goods and now I am re-importing the goods into the country. If I am re-importing the goods into the country, then can I say normal customs duty should be payable? At the time of import, normal custom duty should be payable. But here they have given you certain concession that if you fulfill so and so XYZ conditions, then at the time of re-importation, that is at the time of importation, that is importing the goods again into the country, you need not pay the full customs duty on that, you can pay some concessional duty. Okay, did you understand this? So first what happened was, we exported certain goods, we took some tax benefits from the government. Now after exporting, we are again re-importing those goods. So normally full custom duty should be payable, but they are telling you that there will be some there should be some concession that should be provided. Okay, so here they have given you certain cases. Can you see 6 cases have been given to you, like serial number 1 to serial number 6. Let's start with it. In the first one, what has happened was this: we had exported certain goods under, means what benefits did we take? Either we took the benefit of duty drawback, or we took the refund of IGST paid on the customs duty, IGST paid on the exported goods, or we exported the goods without payment of duty, that is under bond or LUT. Okay, so now listen, either you exported after paying the customs duty and you took the duty drawback of the same, you took a refund of that customs duty paid. Okay, or you exported the goods after payment of IGST, but after payment, we know now that in case of GST, 2 types of exports, there are 2 ways in which the exports can be done. Either you pay the GST and then you take the refund of the same, or you don't pay the GST, you simply sign the bond or LUT. So can we say in this case also, either you did not pay any tax, or you paid some tax and you took the refund of the same. So ultimately we exported and we took the tax benefits also. And if the same goods have been re-imported within a time period of 5 years plus 2 years, or in case of Bhutan, it has been re-imported within a time period of 7 years plus 3 years, but only for the purpose of machinery and equipment exported, then in such cases, when you are re-importing these goods, then you need not pay the full-fledged custom duty on it. The only tax payable on it will be the amount of incentive availed at the time of export. That is, whatever benefit, whatever tax benefits you had availed at the time of exporting, that much amount you paid back to the government, and the government is happy. Okay, acha, but provided when you are re-importing the goods, it should be without remanufacturing or reprocessing through melting, recycling or recasting abroad. Means nothing should have been done abroad on those goods. Okay, similarly, if you had exported some goods and you had taken the benefit of such schemes called as duty exemption schemes, or advanced authorization scheme, or DFIA scheme, or EPCG scheme, these schemes you are going to study separately under FTP. Okay, if you have exported the goods under these schemes, and then if you are re-importing it within a time period of 1 year plus 1 year, then at the time of re-importation, you need not pay the full-fledged customs duty. You can simply pay the IGST and the GST compensation cess. Okay, means you need not pay the custom duty. You can directly pay the IGST and the GST compensation cess if it is applicable. Okay, similarly, when you are exporting some goods under ROTTEP or ROSTEL scheme of FTP, foreign trade policy, if you are exporting the goods under these schemes, okay, and if you are, means you have exported it by after taking some benefits, and then you are re-importing it within 1 year plus 1 year, then in that case, again at the time of re-importation, you need not pay full-fledged custom duty. You can simply pay the amount of benefit that you had availed under the FTP scheme. Means whatever was the FTP benefit, just paid back to the government, and the government is satisfied with that. Okay, next point is very, very important. Now let's say any goods other than above, means you had not exported it under any particular benefit, not exported it under any FTP benefits, etc. Now you had exported the goods for repairs. Okay, for repairs abroad. Means you had sent the goods outside India because you wanted to get the goods repaired outside India. After doing the repair, can we say you're going to bring back the goods into your country? So can we say again re-importation is going to happen? So at the time of re-importation, on those repaired goods, are you required to pay the full custom duty? No. Can we say we had not sold the goods outside India, we had just sent it for repair outside India? So can we say custom duty cannot be made applicable on the entire goods? Now, so what is the concession available? So if you are re-importing it within a time period of 5 years plus extension of 2 years, 5 years plus 2 years, or in case of Bhutan, if you are re-importing it within 7 years, or it can be extended by 3 years in case of machinery and equipment exported. Okay, so if you are basically re-importing it within 5 years plus 2 years, then see how much customs duty are you required to pay. You have to pay the customs duty and the GST. Okay, please listen, customs duty plus the GST compensation says on some value of re-imported goods after repair. Ma'am, how will you find out the value of re-imported goods after repair? So whatever was the fair cost of repair, okay, fair cost, not the actual cost, whatever was the fair cost of doing the repair outside India, plus whatever was the cost of material used for doing that repair, okay, even if it is not actually incurred, doesn't matter, whatever is the fair cost of material used in that repairs, plus insurance and freight, both ways, that is for sending the goods and for bringing the goods, insurance and freight both ways. Okay, this is the total value of your goods after repair, and on this value you are required to pay the customs duty plus the GST plus the GST compensation cess. Okay, please try to understand this. Fair cost of labor, okay, fair cost of repairing, okay, whatever is the market value of repairing expenses plus whatever is the material used, okay, whatever is the material used, okay, even if actual material is used or not, okay, then the fair value of material that is used for doing the repairing plus insurance and freight both ways. Please add all of these value. On this value you are required to pay the customs duty plus the GST plus the GST compensation cess. Okay, fourth point is very, very important. You can get a numerical question on the same. Yes, okay. So in all the previous cases, okay, where we had exported by taking some benefits, so the government simply told that please re-import within the given time frame, and whatever benefit you had taken, you just paid back to the government. Okay, here what happened was we had exported the goods for the purpose of doing the repairs outside, and then we were importing it. So whatever was the total value, whatever was the total expenses for repairs, that is the fair value of repairs plus the material cost for doing the repair plus the freight and insurance both ways, on this just pay the customs duty and the GST. Then the next point, goods other than above re-imported without remanufacturing, means any other case where you are re-importing the goods. Okay, very simple example which I can give you is, let's say you had sent some goods outside India for exhibition purpose. Okay, at the time of sending the goods outside India, there was no tax pay, there was no GST payable because it was not considered as a supply itself, right? But when you are re-importing the goods, let's say there were some unsold goods or the goods could not be sold in those exhibition, then you will be re-importing those goods. Yes, in such cases, when you are re-importing it, again there will be no customs duty payable. Okay, please try to understand this, but there are certain exceptions to this. Suppose this concession of paying no customs duty will be available only if the goods were only in other cases, but it is not available in these three cases. Now, suppose if the goods were exported by 100% EOU, 100% EOU, then in that case you will not get this benefit. Okay, if the goods were exported from customs warehouse, from public or private warehouse, no concession will be available. Or if the re-imported goods, the goods which we are re-importing it back, if these are your some specific goods like tobacco products, petroleum products, etc., then also concession will not be available. In all the other cases, you can re-import it by paying zero customs duty on the same, right? And the last point is your 6A, 6B. Can you see this? 6A, 6B and the last one. Yes. So what are they trying to tell us here is, let's say now here the procedure little bit changes. Now let's say first you manufactured some goods. Okay. After manufacturing the goods, you exported the goods. Now you are re-importing those goods. Okay. The goods which were manufactured in India, and now you are re-importing it for repairs or for reconditioning. Okay, other than specified goods, because specified goods is covered here separately. So if first you manufactured, see I have written here, if you have manufactured, then you exported certain goods, now you are re-importing. Why are you re-importing? Because you want to do some repairs on it, and then you will be re-exporting it. Achha, now if you are re-importing it within a time period of 3 years, or in case of Nepal, Bhutan, if you are re-importing it within a time period of 10 years, then at that time there will be no customs duty payable, provided you are again re-exporting this one. You are again re-exporting it within a time period of 6 months plus 6 months. Ma'am, how did you understand 6 months plus 6 months? 6 months extendable till 1 year from the date of re-importation. Okay, so basically first you manufactured, then you exported, no problem till here. Now if you are re-importing, then normal custom duty will be applicable, but they are telling if you are re-importing within 3 years or 10 years, then no custom duty will be payable, provided you re-exported within a time period of 6 months plus 6 months. So basically my intention was what? My intention to re-import was only to do the repairs, and immediately after doing the repairs, I even re-exported it to the other country. Okay, similarly, same. If you have manufactured some goods plus then you have exported the goods outside India, now you are re-importing. For what purpose? Earlier you were re-importing for repairs or reconditioning. Now you are re-importing for reprocessing, refining, remaking, etc. Okay, for any other purpose, if you are re-importing it within a time period of 1 year, then again no customs duty will be payable, provided you re-export it within the same time period of 6 months plus 6 months. And yes, obviously the department should be satisfied that you are re-exporting the same goods. Okay, means whatever you are re-importing, the same goods you are re-exporting, right? And the last one is for those specified goods like telephone sets, color TV, projectors, etc. If you first manufactured it into India and then you are exporting it and then you are re-importing it, for what purpose? For repairs or for reconditioning. And if you are re-importing within 7 years or 10 years, then again you need not pay any custom duty, provided you will re-export it within a time period of 1 year. Am I clear till here, everyone? Yes. So here what is more important is within how much time you should re-import and what is the concession available, that is how much can you pay instead of paying the entire customs duty. Okay, please go through this table. What you should do ideally is please pause the lecture here and then just go through the table once so that it somewhere fits in your mind. Acha, and before that, let me clarify you regarding this notification which we had studied about exhibition. So we have studied about this in GST also, that whenever you are sending any goods outside India on consignment basis or for exhibition basis, at that time there is no consideration received. Because there is no consideration, it is not considered as a supply as per section number 7, and because it is not considered as a supply, it can even not be considered as a zero rated supply. So there was no IGST payable on that. Do you recollect this? Yes. So now when you sent the goods to the other country, there was no taxes paid. Okay, but let's say in the exhibition the goods could not be sold. If the goods could not be sold, can we say you will re-import the goods? So this will fall under this category. Okay, it will fall under the 5th point, that is the residual category. That is if you have re-imported the goods. Okay, then in that case there will be no customs duty payable at the time of re-import. There is no customs duty payable because this is not actually re-import. This is actually bringing my old goods back into the country, and here this concession will be available provided the re-import happens before 6 months from the date of delivery challan. Means it should come back to our country within a time period of 6 months. Similar thing we had studied in our GST also, that the goods should be sold in the other country within a time period of 6 months. If not sold, then it will be considered as a supply at the end of 6 months. Do you recollect that? Yes. So same provision they have put here also, that if you want to take this concession of not paying any duty at the time of re-import, then just simply what are we supposed to do? Just bring it back within a time period of 6 months. Yes. Okay. Acha. Then they have just given the calculation here, that do you recollect this one, that fair cost of repairs, etc. That whenever you are re-importing, whenever you had exported some goods. Okay, now if you have exported some goods for repairs, for doing the repairs, okay, then in that case, after doing the repairs, you will re-import the goods back into the country. So on what value the custom duty was applicable? The fair cost of labor plus the cost of material plus insurance and freight, both ways. Okay, whatever is the value that you get, on that value you have to pay the customs duty and the GST and the GST compensation cess. Now, how is custom duty paid? This we will study in the further chapter also, but just try to understand whatever is your value, calculate the basic custom duty on that at the rate of 10%. On this basic custom duty, calculate the social welfare surcharge at the rate of 10%, but on this only. Okay, so social welfare surcharge is applicable on the basic custom duty. Then you will get the total value. On this total value, calculate the GST as well as the GST compensation. Okay, so whatever is the value, on that value first calculate the basic custom duty. On that basic custom duty, calculate the social welfare surcharge. You will get the total value for the purpose of GST. Then on this value, calculate the GST as well as the GST compensation cess. Manageable till here they have given the example for the same. Okay, so this was all about my concession which was given under section number 20, that is whenever you are re-importing. Okay, whenever you are re-importing, you need not pay full-fledged of taxes. You can pay some taxes at concessional rate if you fulfill these many conditions. Yes. Chalo, then let's go to the next one. A point we had completed in the concession. Now going on to the B point, that is section number 21. Section number 21 talks about derelict, wreck, jet SAM, float SAM, etc. Now you must have already studied about these things, that whenever there is any cargo or vessel that gets abandoned in the sea with no hope of recovery, okay, and if that comes along with the goods, or let's say there were some goods which were thrown from the ship to save the ship from sinking, or there are some goods which were already floating in the waters, okay, or if there is something which has now come near the seashore, okay, by floating, now if the goods etc have come near the shore, and now if those goods are coming into India, okay, that not exactly goods, but those derelict, jet SAM, float SAM, wreck etc, if these are coming into India along with your goods, along with your vessel, then it will be considered as if you have imported the goods into the country. So whatever you are bringing on purpose into India, that is anyway customs duty will be applicable, plus along with your vessel, along with your goods, if there is any derelict, jet SAM, float SAM, wreck which is coming into India, okay, floating, if it is coming into India, then on those goods also, on that derelict, jet SAM, float SAM, wreck etc, on that also you are required to pay the customs duty, unless you prove to the satisfaction of the proper officer that, sir, these goods I have not imported and these are not my goods. Okay, then in such cases you will be exempted, otherwise you are required to pay the customs duty on those goods. Yes, okay, then going on to the next one, last point under concession, that is point number C. Point C talks about customs rules 2022. Which custom rules? It talks about IGCR, okay, IGCR rules to 2022. Very simple rules, okay. Now here, what is the department telling? What does these rules say? That these rules give the authority to the importer, okay, it gives the authority to the importer that you can avail the benefit of some notification, okay, of some notification which the government is going to pass, and you have to act as per that notification. Okay, example, if you import certain goods, after importing those goods, if you use the goods for some specified purpose only, okay, if you import those goods only for some specified purpose, then we will give you some concession in the rate of duty. Okay, example, during COVID, let's say if you import a cloth for manufacturing mask, okay, for manufacturing masks, then maybe the government will give you the concession that on import of cloth or on import of those raw materials, custom duty, instead of let's say 20%, the custom duty will be applicable at the rate of 5%. Okay, but you have to fulfill all the conditions of that notification. Only if you fulfill the conditions of those notifications, then you can pay the custom duty at some concessional rate. Okay. Now here, what is the importer supposed to do? So the importer is required to go to the common portal. He will give a one-time prior information that he is going to take the benefit of so and so notification. Then he will give his details that I am the importer. After importing the goods, either I am going to do the self-manufacturing or I am going to send it to my job worker. Okay, how much quantity of goods am I going to import? Okay, then the nature and description of the goods imported. What goods have I imported? Okay, particulars of the notification, that okay, which part of the notification benefit am I using for the purpose of paying the concessional rate of duty? Then after that, nature of output service, that after importing, what are you going to do with those goods? Okay, if you have some other department in your company, if you have multiple internal departments in your company, then what are those departments from where the goods are going to be transferred from one department to another? And then finally, for what purpose are you going to use this goods, and what is your intended port of import? That is, will the goods be imported at Gujarat port, at Mumbai port? At which port are you going to import the goods? So all these basic information, one-time information, you will file it online. Once you submit this, then you will be given a IGCR identification number. Okay, you will be given a IGCR identification number, and basically now whenever you are filing, whenever you are submitting any bond, or whenever you are filing any bill of entry etc., just submit this identification number, so that even the commissioner or even the officers will know that okay, you are planning to take the benefit of the notification. Okay, now along with this, now what will happen here is, let's say if there was some goods which was normally taxed at the rate of 10%, okay, but now because of the concession you are required to pay only 2%. So can we say now at the time of import you will simply pay 2%? Okay, but you will have to sign a bond where you promise to pay the difference of 8% in case of any violation. That is, if you violate any provisions, then see, anyway 2% you have paid, but later if the department comes to know that you have made wrong utilization of the notification, etc., then please give a bond. Okay, now itself please give a bond where you promise to pay the differential duty along with interest to the government, so that at least the government is secured that okay, if this person violates, then at least we will get our differential duty. Okay, and in all other cases where the notification is other than the one that provides an exemption benefit, let's say if the notification is such which does not provide you any duty concession benefit, but it provides you some procedural benefit. Okay, example, it tells you that you need not file the bill of entry in advance, or let's say it gives you a concession that you need not file the bill of entry in this format, or it gives you some concession that you need not pay the warehousing charges, etc. It gives you some other concession altogether. Then in that case the bond amount will be equal to the assessable value of goods being imported. That is, whatever value of goods you are importing, 100% of that value, that much amount of bond you are required to furnish. So whenever it is a tax concession bond, whenever there is a tax concession benefit that you are going to take, then please give a bond for the differential amount of duty along with interest. When the notification is not giving you any tax benefit, but it is giving you some other benefit, then please sign a bond which is equal to 100% of the value of the goods which have been imported. Okay, giving a bond does not mean you have paid that amount to the government. Giving a bond just simply means that it is a benefit. Okay, it is a security. It is a security that you are giving to the government. Right, now listen, whenever you are importing, okay, whenever you are importing, now you have to mention this IIN as well as the bond number while filing the bill of entry, so that the commissioner will come to know that okay, you are such a person who wants to take the benefit of this IGCR notification. Then the importer is required to maintain multiple records. Okay, this is not very important, that what quantity and what value of goods have you imported, how much have you sent it to the job worker, how much manufacturing have been done, how much have you transferred it to the other department, how much have you received it back from the job worker, how much is lost, how much is remaining in the stock. All these details is required to be maintained by the importer clearly, so that the commissioner will be easily able to track that how the goods are being utilized, right? Then the very important point here is, the importer shall submit a quarterly statement on the common portal in the prescribed form by 10th day of the following quarter. That is, for every quarter the importer is required to submit a quarterly statement in which he will submit all the details that is required, and whenever the quarter ends, by next month 10th is going to be the due date of the same. Earlier this was a monthly statement, now they have changed it to quarter. Okay, then for job worker, we already know that, can the importer, after importing the raw materials, can he send it to the job worker for further processing? Yes, he can send, and all those details were already shown in the records and already shown in the quarterly statement. But very, very important here is, the maximum period for which the goods can be sent to the job worker is equal to 1 year. Okay, that is, whenever you are sending the goods to the job worker, it should come back to you within a time period of 1 year. Yes, job worker is also required to maintain the data, like how much goods has he received, how much manufacturing has been done, how much has been sent back to the importer. All these details is required to be maintained by the job worker also. Similarly, details are required to be maintained for unit transfer also. Let's say if my manufacturing requires multiple steps, which is done by multiple departments. So how much goods were sent to first department, then how much processing was done, then how much was sent to the second department. All those data is required to be maintained by the importer. Right? Then the next one, procedure for supplying imported goods to the end use recipient. Now, when you have imported some goods, do you recollect you had already told to the department that you are going to use it for some specified purpose, right? So now here, whenever the importer is finally selling those goods, under an invoice or under a e-way bill, he will mention the description and quantity of the goods, yes, and he will maintain all those details, and how much he has ultimately sold to the end use. He will maintain all those details, and he will mention all those details in the quarterly statement. Yes, next point is a little important. Rule number 10 is a little important. Now let's say there are some defective goods. Means you had imported some goods and out of that some goods are defective. Can we say if those goods are defective, then you will not be able to use it for further manufacturing? Yes, or let's say there are some goods which remained unutilized. Okay, then in that case, what you can do is you have got two options. Either you re-export it to the other country. From wherever you have imported, please re-export so that we do not have any confusions here. Okay, if you are not re-exporting, then you can clear it for home consumption. Means you can clear it for home consumption means you can use it for some other purposes also. Till now, whatever cloth I had imported, I was using it for making masks. Yes, but now I can use this cloth for making some other clothes also. Yes, so that is also allowed. But Acha, whatever you want to do, either you want to re-export it or you want to clear for home consumption, it should be done within the time which is specified in the notification. If nothing was specified in the notification, then within 1 year from the date of import, either you re-export it to the other country or you clear it for home consumption. And yes, obviously when you are clearing it for home consumption, then whatever is the differential duty, now you will have to pay the duty on that along with interest. Okay, because now clearing it for home consumption means, are you going to use it for specified purpose or other than specified purpose? Now you are using it for other than specified purpose. So whatever was the differential concessional duty which you had not paid to the government, that you have to pay to the government now along with the interest. Yes, acha, that is given here. Voluntary payment of applicable duty along with interest that has to be paid, and this also we will record it in that quarterly statement that so much of the raw materials we could not utilize it for specified purpose. That's why we have cleared it for home consumption. Yes, acha. Now very important point, that is about the capital goods. Now let's say if I had imported some capital goods for using it for some specified purpose, then can I say on the import of capital goods I would have paid the tax at concessional rates? Yes. Now, once the capital goods are already used, okay, once it is already used for that specified purpose, now can I use it for other purpose? Yes. So, once the capital goods are already used for the specified purpose, once that work is over, after that, I can still use it for other purpose. But can we say again tax will be payable on that? How much tax will be payable? How much tax will be payable? Okay, now listen, can we say now the machine which was actually imported for specified use, now that is being used for non-specified use? Yes, so you should get some punishment. What punishment will you get? Whatever was the depreciated value of that capital goods multiplied by the rate of customs duty. Okay, multiplied by the full rate of customs duty. Can we say full rate of customs duty? Depreciated value means the value as on today multiplied by full rate of customs duty. Can we say this much amount of tax we should pay it back to the government? Acha, but from this, can we say we have already paid some tax at the time of import of those capital goods? How much amount of tax had I already paid? Whatever was the original cost multiplied by concessional rate. This I would have already paid it to the government. So just subtract that much. Whatever is the difference, this is the amount of tax that we have to pay it to the government. Manageable till here. Yes. So acha, now full rate of custom duty, concessional rate of custom duty, original cost, everything will be available to you. Okay, now what is the most important thing here is how to find out the depreciated value. So first of all, depreciation has to be done as per straight line method. Ma'am, how to do the depreciation as per straight line method? So whatever is your original cost, okay, whatever is your original cost, from that start subtracting the depreciation. Ma'am, how much? For the first year, if it has been used for 1 year at least, then for every quarter in the first year, 4444% is required to be depreciated. So can we say it will be 16% per annum for the first year? Yes. Then for every quarter in the second year, it will be 12% per annum. That is 3333% for every quarter, but in the second year. Third year also it is 33%. Fourth and fifth year it is 2.5% for every quarter, and after that it is going to be 2%. Okay. So now for example, let's say the capital goods were used for 1 year and 1 month. For 1 year and 1 month it was used for specified purpose. Then in that case, can I say my depreciation will be 1 full year it was used? For the first year, my depreciation will be total 16%, 4444. And another, later I have used it for 1 month. So 1 month will be considered as 1 quarter. So for the second year, for can we say for 1 quarter, I will take a depreciation of 3%. So my rate of depreciation will be 19%. Acha, how will I use this 19%? This is for calculating my depreciated value, that is original cost minus the depreciation at the rate of 19%. This is how you are required to do the calculation for the purpose of capital goods. This is a little important. Please keep this point in mind specifically. Yes. Now listen, last point which is coming up here is, let's say if you fail to comply with the rules. Okay, that is whatever where your IGCR rules, etc. You have failed to comply, means you have imported the goods, imported the capital goods, but you did not use it for specified purpose, or any such contravention has happened. Then in such case, what will happen? Then in that case, your bond that you had signed with the department, that will get invoked. Means they will use this bond, they will realize the money from you, and then they will start the proceedings on you. Okay, plus they will invoke the bond, means they will recover the tax, they will recover the interest, plus your penalty is also applicable up to rupees 2 lakh. Manageable till here. This last point is applicable in which case? When you have contravened the provisions of the IGCR rules. Manageable till here? Yes. Okay. Chalo, then let's go to the next part, almost the last part of the chapter, which talks about this is a small part, procedure, mechanism and organization for assessment of duty. Now, what do you mean by assessment? Assessment is nothing but calculation of duty, right? This we had seen earlier. So, whenever you are calculating the amount of custom duty that is payable, so you will see how much quantity of goods have been imported, what is the value of goods that have been imported. Then you will do the classification of goods. As per the HSN, etc., you will do the classification. You will find out the rate of duty. After finding out the rate of duty, you will calculate the amount of customs duty applicable on the same. Okay, this was not very important. Now let's go on to the last important part of the chapter, that is section number 13, section number 23, 22. Okay, 13, 22 and 23. These are the next three sections which are very, 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 very important from your exam point of view also, as well as conceptually. Section number 13 talks about duty on pilfered goods. Okay, now here what do you mean by duty on pilfered goods? Pilfered is nothing but petty theft. Okay, petty theft. Now means where the theft has happened, or someone has stolen your goods, but that too in small quantities. The entire package has not been stolen, but the packet has been torn, and from that packet there are certain goods which has been stolen. Okay, it is not a theft of total package. It is not a pilferage of total package. Please try to remember, it's not that the entire carton has gone missing. No, from that carton, maybe 1 or 2 packets have gone missing. And if pilferage has happened after unloading, means after the goods have been unloaded from the vessel or from the vehicle, after the unloading has happened, but before the proper officer has made an order for clearance for home consumption, or before depositing it into the warehouse. So basically after unloading, but before the proper officer has passed any order. During this time, if the goods have been pilfered, then in that case, we will not be liable to pay any duty. Ma'am, why we are not liable to pay any duty? Because after unloading, but before the proper officer has made the order, during this time, the goods were not at all into my custody, right? The goods were into the possession of the custodian. Okay, the goods were into the possession of the custodian and not in my custody. Means I was not handling those goods. The custodian was handling those goods. If custodian was handling, and at that time if pilferage has happened, means I am not at all responsible for that pilferage. So whatever is the lost quantity, first of all, my goods are gone. Now you are asking for the duty also on the same. So no duty will be payable on such goods. Okay, now then ma'am, who will be liable to pay the duty? So in such cases, the custodian of the goods will be liable to pay the custom duty at the rate which is prevailing on the date of arrival of that conveyance. Okay, whenever that arrival manifest was submitted, or import manifest was submitted, or import report was submitted to the proper officer for arrival of that conveyance, on that date, whatever was the rate of duty, at that rate the custodian is required to pay the customs duty. Yes. Okay. Now, what if pilferage is noticed at the time of removal of goods by the importer? So in such cases, suppose if the importer later notices, that there is some pilferage that has happened. Okay. Then in such cases, let's say if the order is already made by the proper officer, okay, at that time I did not observe the pilferage, and later when we were removing the goods for home consumption or we were shifting the goods to the warehouse, during this time if we have observed any pilferage that has happened, then again first of all it will be checked by the surveyors, it will be checked by the agents, etc. And if I have already paid the duty on it, then I will get a duty remission, I will get a duty refund on those goods. Okay, so normally when does pilferage becomes applicable, or when will you call that concept as a pilferage? First of all, it is a petty theft. It is not a theft of the entire package, it is a theft of small quantities from within the package. If this pilferage has happened after unloading but before the proper officer has made any order either for home consumption or for warehousing, before that if pilferage has happened, then I am not required to pay any customs duty on the same. Right? Acha. Similarly, next section that we have got is section number 22. Okay, section number 23. 22 is abandoned goods, deteriorated goods, abatement in case of deteriorated goods, that we will do it separately. Section number 23 talks about remission of duty on goods lost, destroyed or abandoned. Okay, now first let's do section number 23 to subsection 2, which talks about abandoned goods. That is what we have done is, before the proper officer has passed any order either for home consumption or for warehousing, before he has passed any order, before he has given any clearance, before that the importer has relinquished the title. Means importer says that no, I don't want these goods, I abandon these goods, I don't want these goods at all. Then in such cases I will not be liable to pay the duty on such goods. Okay, but if the goods were involved in some offense, okay, let's say those were smuggled goods, and then I say no, I don't want these goods, etc., then this provision is not applicable. Okay, but normal cases when you are importing any goods and before passing any order either for home consumption or for warehousing, before that if you relinquish the title, then in such cases you will not be required to pay any duty on the same. Okay, now next one is section number 23(1), which talks about remission of duty in case of goods lost or destroyed. Now let's say if there are certain goods which have been lost, okay, it is not pilferage, it is not petty theft, it is lost altogether, okay, or if it is destroyed altogether, maybe because of fire or any other reason, either it has been lost or it has been destroyed at any time before clearance, for home consumption, means either it is lost at the customs port or it is lost at the warehouse. Okay, doesn't matter, at any time before clearance for home consumption. Can we say we can deposit the goods in the warehouse also and then we can clear it for home consumption? So any time before we clear it for home consumption, if it is shown, if we have proved it, here the burden is on us, here the onus to prove that there is loss or destruction that has happened, that is on us. So if we prove it to the satisfaction of assistant commissioner or deputy commissioner that we have lost some goods or the goods have been destroyed, then in that case I will not be required to pay any duty on those goods. Are you clear till here, everyone? Yes. And then they have given the difference between section number 13 and section number 23. See, section number 13 is at the port itself before he makes any order. Okay, and that was petty theft. In section number 23, what happened was, first of all, it was a full-fledged loss or destruction, and this is at any time. This can be at port also, this can be at warehouse also. Pilferage at warehouse is not at all considered, but loss at warehouse can still be remitted under section number 23. Okay, similarly, section number 22 talks about abatement of duty on damaged or deteriorated goods. Okay, now your damaged means what? Damage means there is some physical damage which has been caused to the goods, and because of which now the goods cannot be sold at its full value. Okay, the goods have been damaged, there is some physical damage which has happened, the goods are there with you. Okay, it's not that it has been lost or it has been destroyed, the goods are there, but when we see the goods, there is physical damage that has been caused to the goods. Or deterioration means the quality of goods have been reduced. Okay, maybe because of any natural calamities or any natural causes, the quality of the goods have deteriorated. Then in such cases, if you prove it to the satisfaction of same assistant commissioner or deputy commissioner that sir, our goods have damaged or deteriorated. Okay, our goods have damaged or our goods have deteriorated at any time before or during unloading. Okay, means when you were unloading, even before that, the goods were already damaged or deteriorated, then sir, please allow me some discount, please allow me some abatement. Okay, or if you're going to clear the goods for home consumption, if the goods have been damaged after unloading but before their examination, then in that case you will get some concession. Or if the goods that you're going to take it for the warehouse, if those goods have been damaged any time before home consumption, before clearance for home consumption, that is, it can be at the port also, it can be in the warehouse also, if it has been damaged, then what is going to happen? Then in that case you can apply for some abatement. Okay, you can apply for some abatement. Ma'am, how to calculate the abatement, etc., I will tell you, but first try to understand when has this damage or deterioration happened. So either these goods have been damaged or deterioration before itself, that is before unloading, or in case of home consumption goods, it has been damaged after unloading but before examination, or in case of warehouse goods, it has been damaged at any time before clearance for home consumption. Acha, now this is not because of my mistake. Okay, this damage, this deterioration is not because of my mistake. Then in that case you can pay some lower rate of duty. Ma'am, how to calculate that lower rate of duty? So now let's say, for example, originally the goods value was 1 lakh rupee. Because of damage and deterioration, the value has reduced to 70,000 rupee. So can we say my value has come down to 70%? So whatever was my duty payable, even that duty payable will come down to 70%. Are you able to understand this? So basically, whatever, here they have given you the formula, but obviously you need not by heart this formula. So basically proportionately. Okay, for example, on 1 lakh value of goods, earlier, let's say tax was payable. Tax payable was, let's say, 5,000 rupees, for example. Okay, now the value has come down to 70,000 rupees. So now just do the cross multiplication and calculate the tax amount. That is, even this will come down to 70%, that is 3,500. That is, instead of 5,000, I will be simply paying 3,500. Manageable till here. Did you understand the difference here? We did section number 13, section number 22 and section number 23. Then going on to the next section, that is section number 24, which talks about denaturing or mutilation of goods. Okay, denaturing or mutilation of goods means, let's say if you have imported some goods and those imported goods can be ordinarily, those can be normally be used for more than one purpose. Okay, normally if I have imported something and it has multiple uses. Okay, and if the customs rate of duty is different for both the type of imports. Example, if I have imported alcohol, okay, or let's say if I have imported denatured ENA, right? Or let's say, let's take a very simple example. That is, let's say you have imported alcohol. Now, alcohol can be used for human consumption also, and alcohol can be used for medicines also. Okay, now when you are importing alcohol for drinking purpose, then in such case, let's say the custom duty applicable on it is equal to 20%. Let's say you are importing alcohol for medicine. At that time, the custom duty is applicable at 5%. What will you always say? You will always say that I have imported it for the purpose of medicinal purpose. Okay, so what can the department do is, the department can do some chemical procedure on this alcohol and it can make it unfit for drinking. Okay, it can make it unfit for one purpose, and so that it can now be used only for medicinal purpose. It has the power, central government has the powers that it can make the rules for doing this denaturing or mutilation, so that there is no wrong utilization of law that is happening. Very clear with this? Yes, and then section number 25, you can just do it on your own. Section number 25 simply talks about exemptions from custom duty. That is, either general exemptions can be given to you or special exemptions can be given to you from the customs duty. Yes, and then going on to the last two sections, that is section 25A and 25B. These two are very, very specific, applicable only for some specific goods. So 25A says that, let's say if you have imported certain goods, okay, if you have imported certain goods for the purpose of repairs into India. Okay, you had imported certain goods for the purpose of repairs into India, and you are going to re-export it within a time period of 1 year. Okay, within a time period of 1 year. Means, what is the purpose of importing it? The purpose of importing those goods are only to do repair or further manufacturing or processing. Then in that case, when you import it, after that you will do the repair and then it will be re-exported within a time period of 1 year, then they are telling that at the time of its import, you need not pay any customs duty. This is a very specific provision applicable only for some notified goods. And similarly, 25B talks about, again it talks about some specified goods, and this section overrides section number 20, that is that concessional table that we had studied now, 3 years, 10 years, etc. Nepal, Bhutan. This section overrides that section number 20. Here they are telling that, let's say first you had exported certain goods. Okay, then after that, first you had exported certain goods, then you have re-imported those goods for the purpose of repairs, and after that you are going to re-export it. Okay, after that you are going to re-export it within a time period of 1 year. Then in such cases, no, here what is happening is, first you have the goods have been sent outside India. Okay, the goods have been sent outside India for the purpose of repairs. Okay, the goods have been sent outside India for the purpose of repairs. In section 25, the repairs was happening in India. Here the repair is happening outside India. After doing the repairs outside India, you are going to get it re-imported into India, and that re-import is done within a time period of 1 year. Then in such cases, on some notified goods, you need not pay any customs duty at all. Now, do you recollect? Please try to relate this with section number 21. Okay, please try to related with section number 20. Do you recollect in section number 20, we had studied that point number 4, where the repairing etc. was done outside India, and then you were re-importing those repaired goods. Then custom duty was applicable on that fair value of repairs plus the cost of material plus insurance and freight. So there was some duty that was payable. Okay, but here they are telling that if you are re-importing those goods after repair, and if those goods are specified goods, then you need not pay any customs duty at all. Okay, so 25A and 25B are two very, very specific provisions, not very important, but just read it once. Yes, so this was all about my first chapter, that is levy of and exemptions from custom duty. What is very important here is, one is that section number 15 and section number 16, that is which dates rate of custom duty are we supposed to take. Okay, those two sections are super duper important. Then your section number 20, that is importation, re-importation at concession, that table is very, very important. Okay, then after that your IGCR is required to be studied at least once, and in that specifically the depreciation, that capital goods putting it to use for some other purpose, that point is very, very important. Then section number 13, 22 and 23. 13 is about pilferage, 22 was about abatement in case of damage or deterioration, and 23 is talking about that loss, destroyed or relinquishment of title. These points are specifically very, very specific points, so please read these ones. You can expect one question out of any of these concepts. Yes, manageable till here? Can we go ahead? Yes. Okay, let's start with the next chapter, that is classification of imported and export goods under customs. Yes, very, very simple, not very, very important. Just try to understand. We will do it totally, fully. Now, we had already studied in the last chapter that whenever you are doing levy assessment and levy etc., for levying the customs duty, you need to know the rate of customs duty. From where will you get the rate of custom duty? Rate of custom duty, you will get it from the Customs Tariff Act. Okay, in the Customs Tariff Act also, they have given the schedules, okay, in which they have listed the name of the products, and beside the name of the products, they have written the rate of customs duty that will be applicable. That is, here, whenever we talk about classification, the rate becomes very, very important, and rate of customs duty is given in the schedule to the Customs Tariff Act 1975. Okay, now this Customs Tariff Act 1975 has two schedules mainly in respect of rates. First schedule talks about the rate of custom duty applicable on goods, and second schedule talks about rate of custom duty applicable on export of goods. First schedule is on import of goods, second schedule is export of goods. Okay, so first schedule is going to talk about import duty, second schedule is going to talk about the export duty. Now here, what are we going to study in this particular chapter is how to interpret, okay, how to do the interpretation and how to arrive at the correct rate of custom duty that is applicable. Now, before we go ahead, now within this, they have given you some rules of interpretation. You have to apply these rules of interpretation, and then you have to do the interpretation and find out the correct rate of customs duty. Yes. Now I'll just show it to you once. I'll just check if I have it in my this thing. One second now. Yes, so I have this screenshot available with me. Now see, can you see this on the board, everyone? This is the first schedule to the Customs Tariff Act. Okay, first schedule. First schedule means this is talking about the import duty. Within that, can you see one section is there? Section 1 is written here. Okay, section 1 talks about live animal products. Then this section has some notes applicable to it. Then within that, okay, that becomes your section notes. Okay, then below that, can you see chapter number 1 is coming? Chapter number 1, live animals, is written. So similarly, within a section, there will be multiple chapters. Like chapter 1 talks about live animals, and within that also there is a particular note coming. Okay, then there is a table coming here, which is a 5-column table. That is your tariff item, description of goods, unit, standard rate of duty, and preferential areas rate of duty. Okay, now what is this tariff item? This tariff item is nothing but your HSN code. Okay, this is nothing but your HSN code. First 4 digits will be your basic classification. Then the heading, subheading, sub classification, all those things is going to start. Then the description of goods is given, unit is given, then the standard rate and the preferential rate. Standard rate means normally this is the rate of custom duty applicable, but if you are importing it from some specific places, then the preferential rate of duty will be applicable. If preferential rate of duty is put as dash, okay, if it is put as dash, that means what? That means you have to follow the standard rate of duty. Okay, that does not mean that there is no custom duty applicable on it. Okay, and in this also, in this table also, can you see besides some HSN codes, only the rate of duty is written. Okay, example, the first line, that is horses. Okay, within this live horses, you will see the horses word coming. Besides horses, there is no rate of custom duty return, but besides this pure bred breeding animals, 30% is return. So only the item besides which the rate is written, that is your tariff item, from which you will check the rate of duty. Okay, suppose if you go to the next line, that is others. Beside others, there is no rate of duty return, because from others we have to check that our product falls under which category. Okay, this is how the classification is generally done, and the one which I had shown you, that is an actual screenshot which I have taken from the custom schedule. Okay, so as you can see here, classification, whenever we want to do any classification, first of all we will use the HSN system, just like we were using in our GST. Similarly here we are going to use our HSN system. Normally 4-digit system is used, as we just now saw. Okay, then after that further 2 digits are added for sub classification, which are termed as subheadings, then another 2 are added for sub classification, and this way generally it goes up to 8 digits, and whenever you reach the 8 digits means you have properly classified that item, and besides that item the rate of customs duty will be written. Okay, now there are certain rules of interpretation, that is how to interpret these sections, these notes, etc. And whatever number of rules are there, you have to apply it sequentially. That is, first try to apply the rule number 1. If that is not possible, then go to rule number 2, so on and so forth. Okay, now similarly here they have given you the first schedule of the customs tariff. Okay, section we saw, chapters we saw, chapter notes we saw, heading, subheading, subheading. Okay, this we have already seen. Can you see here in the screenshot, everyone? Section, this is which section? This is section number 1, which talks about live animal and animal products. Within that, can you see the notes? Okay, then we started with the first chapter, that is live animals. Within that we have got the chapter notes, and then your tariff item starts, rate of duty is given, etc. The same thing is explained here. Please do not by heart it. Okay, now see what are they telling. General explanatory notes are given to the first schedule, that whenever the relevance of first dash, 2 dash, 3 dash, can you see here from the diagram what is the relevance? What is the relevance of 1 dash, 2 dash and 3 dashes? Now let's talk about the first one. Okay, within horses, can you see besides horse there is a single dash given, means there is a further classification possible within the horse, that's why a single dash is given. Now when they have done the second classification, can you see that? When they have done the next classification, that is pure bred breeding animals. Now this is the final product. So besides this, the rate of duty is written as 30%. Then they go to the others. Okay, then they go to the others. Now within others also, others is not the main classification. Within others also we have got other classification. So whatever are the further classification, besides that multiple dashes will be written. Okay, percentage. Example, can you see here? Besides 30, percentage means what? This is the customs duty rate. Acha. Then after that, in the preferential rate of duty, dash 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 was returned. Does that mean that there is no tax applicable? No, tax is applicable, and that too tax will be applicable at the standard rate, right? Chalo, now I'm going to the rules of interpretation. Now see what are they telling us in this rules of interpretation. Let's start with the first rule. First rule simply says it is a general rule of classification that section name, chapter name and subchapter. Okay, section name. Can you see this, everyone? Here, section name. What was the section name? Section name was live animals and animal product. What is the chapter name? Chapter name is live animals. Okay, then what is the subchapter name? It is written here, live horses, asses, mules and hinds. Okay, these are not having any legal force. Okay, means you don't have to do the classification on the basis of these names. You don't have to do the classification on this. Okay, but whatever is the tariff item, can you see? Like pure bred breeding animals, horses for polo and so on and so forth, whatever is written there, on that basis you have to do the classification. So basically chapter name, section name, subsection, subchapter name, etc. these are not going to have any impact. It can so happen that the section name differs from the tariff item. So what we have to see is we have to see the tariff item. Okay, another one. Now going on to the next rule, that is rule number 2A, 2B. Okay, what does rule number 2A and 2B talks about? Rule number 2A and 2B talks about what if you want to do classification of any item which is incomplete or which is unfinished, etc. Okay, let's talk about a car without a steering. Okay, a car, we have imported a car, but it is without steering. So obviously you will not get a tariff item called as car without steering. But obviously in the classification you will get a tariff item called as car. Okay, so what rate of custom duty will be applicable on that car without steering? Obviously that rate of duty which is applicable on the car. Okay, so if there is any incomplete item or if there is any unfinished item, then please finish it. Assume that it is finished and then do the classification and find out the rate of duty. Yes, similarly, if there is any item, okay, if I am importing this mobile phone, okay, if I am importing a particular mobile phone with its mobile cover, okay, mobile cover is already attached to it, then in that case, obviously I am not going to find out, I am not going to search for a tariff item called as phone with mobile cover. No, I am just going to search for a mobile phone, right? So whatever is the rate of duty applicable on mobile phone, that will be applicable on the mobile phone with cover. Okay, that was my rule number 2. Then rule number 3 talks about classification in case the goods are classifiable under 2 or more headings. Okay, now let's say if there is a particular goods which is classifiable under multiple headings. Okay, example, your ICAI has given the example of a electric shaving machine. Okay, now electric shaving machine can be considered as a shaver also, or it can be considered as an electrical machine also. So it is best suited under what? It is best suited under shavers. So it should be classified as shavers. Okay, similarly, if let's say I am importing a pencil with an eraser. Have you seen certain pencils and on the top of that pencil, on the back side of that pencil, there is a small eraser which is put up there. So how will you classify this? You will not get something called as pencil with eraser. Okay, so you will classify it as a pencil because you have to find out what is the main character there. Okay, the main character there is pencil. Eraser is just given as convenience, right? So accordingly, you will have to do the classification, right? Then after that, similarly, going on to the next rule, that is rule number 4, which talks about the ACAI rule. ACAI rule is nothing but similar. That is, if you are not able to do classification of a particular goods, then please go and check the similar goods. Okay, similar goods and see what is the rate of custom duty applicable on those similar goods. Just apply that rate. Okay, now let's say I have imported. Okay, I have imported, let's say this particular water bottle, and this is with a sipper. Okay, this water bottle is with a sipper. So I am searching in the first schedule water bottle with sipper, but I am not getting anything called as water bottle with sipper. But I got something called as normal water bottle. So I will take the customs duty rate which is applicable on a water bottle. Okay. And then after that, going on to the next rule, that is rule number 5. Rule number 5 talks about packaging items. Okay, packaging items. Very, very simple. Now let's say if there is such a packing material. Okay, if there is such a packing material which can be used only for one category of goods. Okay, example, a guitar box. Okay, have you seen a guitar box? That guitar box is always same. The shape of a guitar box is always same as that of a guitar. Yes, so that what will be the customs duty applicable? What rate will be applicable on that guitar box? obviously that rate will be applicable, which is applicable on the guitar. Okay, why? Because that guitar box can be used only for that guitar. Okay, acha. Alternatively, let's say there is a cardboard box. Okay, let's say there is a cardboard box, big cardboard box, which can be used for multiple things. I can keep some books also in that. I can keep some, some computer also in that. There is a big cardboard box. So, is it specific to one item, or it has multiple uses? It has multiple uses. So, we will take the rate of duty which is applicable on cardboard boxes, which is applicable on packing material. Okay, so if it is specific, then take the rate of that particular goods. If it is general, then take the rate of the packing material. Manageable till here? Yes. Okay, then going on to the next one, that is rule number 6. Rule number 6 talks about only subheadings. I hope you can read it. Only subheadings at the same level. Only subheadings at the same level are comparable. Okay, obviously. Now let's say I will just show it to you here. Can you see here? Can you see here? Now they have given you the heading, subheading, subheading, etc. Now when we talk about 0101, can you see here in the first line 0101, live horses, asses, mules and hinnies are given. This is nothing but the heading. Okay, then within this heading you have got the subheading, and within that you have got the subheading also. Yes, so can we compare this horses? Can I compare this first level of horses with the next level of heading, that is 0102, which is the last line on this page? No, it is not comparable. So only at the same level, it is comparable. Yes. Okay, similarly, when we talk about section notes or when we talk about chapter notes, can you see the section notes? Can we use this section notes for any other section? No, it can be used only for this section. Similarly, the chapter notes, can you see chapter number 1, live animals notes are given. So this chapter notes can be used only for first chapter. This cannot be used for any other chapter, right? Then they have given you some classification of parts. Okay, this is very simple, classification of parts. Now let's say if I'm importing a particular parts which is specific to the main product. Okay, let's say I am importing a mobile cover specifically with a mobile phone. Okay, I am importing mobile covers along with a mobile phone. Okay, and that mobile cover fits only to that particular mobile phone. Okay, then in that case, what will be the rate of duty applicable on that mobile cover? The same rate of duty which is applicable to the phone, because it is a specific product which can be used only with it is a specific cover which can be used only with that specific mobile phone. Okay, but let's say for example, I am importing something. Okay, let's say along with the AC remote, where is my AC remote? Along with the AC remote, I am importing certain batteries. Okay, along with this, I am importing certain batteries, and these batteries can work either in this remote also, or it can work in some other products also. It can work in my kids' toys also, car toys, etc. It can work in the wall clock also. It can work in the AC remote also. So it is not specific. Okay, it is not specific to one product. So in that case, that battery will be taxed separately as a battery. I hope I am very clear with this, everyone. Yes, and the last one talks about project imports. Okay, very nice concept which they have introduced here. Project imports. Okay, project imports is nothing but import of some big capital goods like machinery, instrument, apparatus, etc., which falls under different classification, but which are imported for establishing a big unit in India. Okay, let's say I want to start a big manufacturing facility in India, or I want to do substantial expansion of my manufacturing facility, for which I need to import some machinery, some equipment, some apparatus, some other capital goods, etc. I need to import. Now, when I am going to import this, can we say these are going to fall under different HSN codes? So, different rate of custom duty will be there. So the law says that no problem if you are importing it together for a particular project, for setting up a factory, etc., then we will apply a consolidated rate of customs duty on that. Means you need not do separate bifurcation. On the total project imports that you have done, we will apply a consolidated rate. Okay, now the HSN code, the heading number for this project import is 9801. Okay, so within 9801, whatever is the rate of duty applicable, that will be applicable on all the products taken together. Now, this was mainly applicable on our capital goods. Okay, but along with these capital goods, you can also import some spare parts, raw materials, consumables, some small items, but that can be maximum up to 10% of the total value of goods which have been imported. So some, your revenue expenditure, etc., that is your small items, spare parts, consumables can also be imported along with big machinery, but the value should not exceed 10% of the value of goods that can be imported. Yes, and generally this is used, this scheme is used by whom? This is used by big industrial plants, irrigation projects, power projects, mining projects, oil projects, etc., because they need heavy machinery and they will import it all together. So whenever they are importing, they need not do separate classification. They can simply do what? They can simply apply the consolidated rate of customs duty. Manageable till here? Yes, so please do not by heart it, just try to understand. I have given you examples for almost every rule. So please just try to understand from there. Manageable till here? Okay, done. Let's go to the next chapter, everyone. Okay, so let's go to the next chapter, that is types of duty. Very simple chapter, manageable chapter, everyone. Let's pay attention here. Okay, so now what are the different types of duties which are applicable under the customs law? Let's try to study that. So first of all, we know that two types of duties there. One is your import duty, another one is your export duty, right? Import duty mentioned under first schedule, export duty mentioned under your second schedule. Right now apart from your basic custom duty, okay, apart from whatever was mentioned in your first schedule, etc., that was your basic custom duty. Apart from that, what other duties can become applicable? Now first one is your IGST, integrated tax. This we have already studied, that at the time of import, along with customs duty, we are also required to pay the GST. Okay, why are we required to pay the GST? Just to balance it out with the local market, because if we are purchasing something locally also, then also we are required to pay CGST, SGST, IGST. So similarly, when you are importing it from the other country, at that time also you are required to pay the IGST. Okay, now IGST maximum rate will be 40%, as we have already studied in our charge of GST chapter. Maximum rate is 40%. As of now, the normal rate that is going on majority of the products is 18%. Right now, this IGST will be applicable on what value? That is, what is the assessable value for the purpose of calculating IGST. So first you take the value for customs. Okay, the value that you are going to find out in the valuation chapter. You will take the value under customs, plus on that you will add the basic custom duty, plus you will add the social welfare surcharge, plus you will add all the other duties under customs. So basically on the value you will add all the type of customs duty. After adding this, you will get the assessable value for the purpose of GST. On this assessable value for the purpose of GST, you will calculate IGST also, and you will calculate the GST compensation cess also. Okay, that is given under section number 3.7. Similarly, section number 3.8a. Okay, I think we have done this somewhere before. I don't remember where, in which chapter I had taught you this. I think we had done this in importation and exportation under GST, that how to calculate the value in case of warehoused goods. That is, where the goods are kept in warehouse and later the goods are cleared for home consumption. Okay, so in case if the goods are kept in the warehouse, okay, and if the goods were kept in the warehouse, at that time if the goods were sold to someone else, do you recollect? If the goods are kept in the warehouse and it is sold, then at that time on such sales GST is not applicable, but later when it is cleared from the home consumption, at that time we have to pay the GST on the same. Right? So in such cases, what will be the value in case the goods are sold in the warehouse? Let's say I was the importer, but while the goods were kept in the warehouse, I have sold it to someone else. Can I say now that someone else is going to clear the goods from the warehouse? Right? So that person is required to pay the customs duty, plus he is required to pay the IGST. So what will be the value for that purpose? Where the value of such goods are sold, where the whole of such goods are sold, the value determined under subsection 8, or the transaction value of such goods, whichever is higher. That is, whatever was the assessable value plus the customs duty, that value, or the transaction value at which I have sold to the other person, out of these two, whichever is higher, that will be considered as the value for the purpose of calculating the IGST. Right? Acha, what if the goods have been sold multiple times while the goods were in the warehouse? Then in such case, the transaction value, it will be either the assessable value after adding all the customs duty, or or the highest transaction value. Okay, the transaction value which is the latest transaction value out of these two, whichever is higher. Yes, so this is the value for determining, this is going to be the value for the purpose of calculating the IGST in such a case. Acha, what if the goods have been imported by SEZ? Okay, so SEZ's main operations are going to do the export. So whenever SEZ is importing any goods, okay, then in that case it is exempted from whole of IGST. Similarly, when the goods are imported by EOU, okay, when it is imported by EOU, at that time it is liable for custom duty. But when it is imported by 100% EOU, okay, when it is imported by 100% EOU, then it is exempted from basic custom duty. It is exempted from IGST also. Yes. Okay, then after that, going to the next one, GST compensation cess, nothing very special about it. So whenever IGST is applicable, on whatever value IGST is applicable, on the same value GST compensation cess is also applicable. GST compensation cess is not applicable on all the goods. It is applicable only on certain specific category of goods, and that too now the cess is going to get over by 31st March 2026. Yes, acha. Now see, now different type of duties are coming up here. Let's do section number 31, 33, 35. Okay, section number 331 talks about the additional duty. Now let's say if you are manufacturing certain goods in India, then can we say on those goods excise duty will also be applicable? It's still there are some goods now on which excise duty is applicable. So if excise duty was applicable, if the goods would have been manufactured in India, and if you are importing the same goods from the other country, then in that case, to balance it out, they will levy additional duty under section number 31. Okay, whatever is the value of the goods that you have imported, on that value there will be an additional duty that will be levied. This is basically to counterbalance the excise duty. Similarly, going to the next section, that is section number 33. Section number 33 talks about the countervailing duty. Okay, countervailing duty under section 33. Now let's say if I am manufacturing this particular AC remote in India, okay, and for manufacturing the AC remote, can I say I need some spare parts? Yes, and on those spare parts, on those raw materials, on those components, etc., if excise duty has been levied, can we say on raw materials of this particular product, if excise duty is levied, ultimately that will be included in the cost of this product. And instead of manufacturing this in India, I have imported it from the other country. If I have imported this from the other country, again to counterbalance the excise duty on the raw material, not on the finished product. The excise duty paid on the raw material, for that countervailing duty is levied under section number 33. So if the central government is of the opinion that we should levy, then it can levy such countervailing duty. Okay, similarly, section number 35, which talks about your special additional duty. Special additional duty is the duty which is levied to counterbalance the local taxes, VAT, sales tax, local taxes, etc. Can we say still now also VAT, CST is applicable? So to counterbalance these products, see, if those are manufactured here in India or if those are sold here in India, then VAT will be applicable. But that will not be applicable when you are importing it from the other country. So they are telling that let's balance this out. Otherwise, more and more people will opt for import. So what they did was, at the time of import, they will levy the special additional duty. Maximum percentage will be 4%. Yes. So 31, 33 and 35, these are some additional taxes that we have studied. Now going on to the next one, that is social welfare surcharge. Social welfare surcharge is levied at the rate of 10% on the basic custom duty. Okay, see now how do we start the how do we normally start the calculation? The calculation is, first we do the valuation under the customs law. On this valuation, we calculate the basic custom duty. Then we calculate the other duties if applicable, that is 31, 33, 35, any other duties if applicable, we'll calculate that. And then we calculate the social welfare surcharge. Okay, social welfare surcharge comes at the rate of 10%. But 10% on what? It comes at the rate of 10% only on the basic custom duty. Means it does not come on the other custom duty, it comes only on the basic custom duty. This is all about your social welfare surcharge. And then the last one, that is the AIDC, that is the Agricultural Infrastructure and Development Cess. This is levied on certain goods. Okay, only when the government has notified that these goods will be leviable for AIDC, then it will be levied. And it is also a type of customs duty. itself, this will be calculated on the value of the goods. Okay, just like basic custom duty was calculated on value, these additional duties were calculated on the value. Similarly, AIDC will also be calculated on the value itself, just that social welfare surcharge is not calculated on the value, it is calculated on the basic custom duty. Manageable till here? Yes. Then let's go to the next section, that is section number 8 and 8A. Section number 8 and 8A gives the powers to the government that government can at any point of time, it can impose import duty, or it can enhance import duty, or it can impose export duty or enhance export duty. Means whenever the government does not want you to do any imports, at that time the government can enhance the import duty. Okay, similarly, whenever the government doesn't want you to export a certain category of goods, then it can impose some export duty on it, or it can enhance the export duty on these particular products. So basically it has just given the powers. Okay, it has just given the powers to the government that they can do so. Right. Similarly, going to the next section, that is section number 8B, which talks about safeguard duty. Okay, it talks about the safeguard duty. Now, whenever the government is of the opinion that a particular article, okay, a particular item is being imported into India in increased quantity, means all of a sudden the import quantity of a particular category of goods have increased, and because of which my domestic market can get affected. Can we say if more and more imported products are floating into the Indian industry, then it will affect the manufacturers here in India? Then in such cases, the government has got the powers to import the safeguard duty. Okay, now safeguard duty means what? The government will say that up to some normal quantity, okay, up to normal quantity, normal custom duty will be payable. But once your normal quantity is exceeded, then along with the normal duty, safeguard duty will also become applicable. Okay, ma'am, what do you mean by normal quantity? Normal quantity means whatever was your average imports of the last 3 years for which the data is available. Okay, average average level of imports for the last 3 years. If you are importing up to that much, no problem, we will not take any safeguard duty. But if you are importing any quantity in excess of that, then on the excess amount, the safeguard duty will be applicable. Okay, then the next one is very nice point and very important point from your exam point of view also. In which cases will you get exemption from safeguard duty? Now let's say if you are importing certain article from a developing country, okay, not from a developed but from a developing country, and the share of import from that country does not exceed 3% of our total imports. Okay, whatever is India's total import multiplied by 3% of that article. Let's say I am importing totally 5 lakh units of that particular article into India, and share of import from that country, from a developing country, does not exceed 3% of this 5 lakh units imported. Then in such cases, safeguard duty will not be applicable. Okay, so if you are importing it from a developing country and individually from that particular country, the share does not exceed 3% of the total imports of that article into India, then in such cases safeguard duty will not be applicable. Acha, what if you are importing from multiple developing countries? Then share of each developing country should not exceed 3% of my total imports, and all of these countries taken together, it should not exceed 9%. Okay, if it exceeds 9%, then in such cases safeguard duty will be applicable. Right? Then the next one, if the imports are done by 100% EOU, or if the imports are done by a unit in SEZ, then in such cases it will not be, safeguard duty will never be applicable unless if you clear it into DTA. Means after importing, if you are clearing the goods into DTA, then boss, the purpose is not fulfilled, then the safeguard duty will be applicable. Right? And whenever the government has doubt that you are importing in very high quantities, which is more than the average of the last 3 years, then the government can do something called as provisional assessment. Provisional assessment means it will start doing the inquiry, etc., that why are you importing in such huge quantities, and then it will levy the provisional safeguard duty on you, which you are required to pay temporarily, which will be in force for a period of 200 days, and later after a period of 200 days, the government will finally determine that whether duty was payable by you or duty was not payable. And whenever the safeguard duty is imposed on you, it will be valid for a period of 4 years, which can be extended by another 6 years. That is, it is valid for a period of maximum 10 years. Manageable till here? Yes, so this was your safeguard duty, that is where you are importing more than the limits. Right? Then going on to the next one, that is section number 9, which talks about countervailing duty on subsidized article. Okay, it can be called as CVD, countervailing duty on subsidized articles, or it can also be called as, anti-subsidy duty. Okay, now let's say you are importing some goods from the other country, and that other country, okay, you are the importer, exporter is sitting in some other country. Let's say the other country's government, okay, the other country's government has given some subsidy. Okay, it has given some subsidy to the exporter that, you will get so and so amount of subsidy that can be related to manufacturing, that can be related to production, that can be related to transportation of goods, etc. It can be any sort of subsidy which is given by the other country to its exporter. And because the exporter has got some subsidy, can we say the products become cheaper for him? That is, he can sell it even at a lower selling price now. And now such articles are imported into India, which may be in the same condition or may be changed, doesn't matter, but those goods are getting imported into India, and the importation may or may not be directly from the country of manufacture or production. So basically you are importing certain goods from the other country at a very low price. Why low price? Because the other country had given subsidy to its exporter. Right, ma'am, what do you mean by subsidy? Means some financial either some financial contribution was given by that country's government, or some income or price support was given by that particular government, or the government was making funding to a funding mechanism, or entrusted or directs a private body to carry out one or more function. So basically some or the other financial benefit was given to that exporter, because of which the selling price of the exporter, cost price of the exporter dropped, and because of which he is now even selling it to us at a very lower price. But can we say because of this subsidy which is given to our exporter in the other country, because of that people will start doing more and more imports? Yes, na? If the selling price of the product is reducing, then the people will start doing more and more imports from the other country. So in such cases, the government has the powers that it can levy something called as CVD on subsidized articles. Yes. Now here, how much amount of anti-subsidy duty or countervailing duty can be levied on you? So whatever was the amount of subsidy given by that other country, okay, whatever was the amount of subsidy given by that other country on the goods exported into India, on that, whatever was the amount of subsidy, that much amount we will have to pay back to the government, called as anti-subsidy duty. Okay, but if you try to bluff with the government, that is, you try to alter the name of the article, or if you try to change the composition of the article, or you import it in unassembled manner, or you import it by changing the country, etc., just because you wanted to get rid of this anti-subsidy duty, then in such cases, boss, we are not going to spare you, and you are still required to pay this countervailing duty on the subsidized articles. Yes, acha. Now listen, let's say for example, normally before this subsidy, those goods were imported into India at 500 rupees. Okay, and now after the subsidy, okay, after this subsidy thing, etc., now you are importing this as, let's say, now you are importing this at 400 rupees. So can we say there is a margin of 100 rupees here? So 100 rupees will be considered as the subsidy, and this is the amount that you have to pay to the government, called as anti-subsidy duty. Okay, now let's say the government has fixed, the anti-subsidy duty as 100 rupees, and now that other country has even further reduced the price. See, now once Indian government will levy this 100 rupees as anti-subsidy, then in such cases, can we say we will start reducing our imports from that other country? Right? But what will the other country say that? Now, what will the other country say? The other country will say that, don't worry, instead of 400, we can still give you at 300 rupees. I say, wow, if I get it at 300 rupees instead of 500, I am having a benefit of 200. No problem. Out of this 100 I will pay as subsidy to the government, as anti-subsidy duty to the government. But still I am having a benefit of 100 rupees. So they are telling that if we are trying to absorb this countervailing duty further, that is, if there is a reduction in the export price without any resale price in India, or under such other circumstances as may be provided, then the central government can revise this figure. Earlier the government had fixed that the anti-subsidy amount will be 100 rupees. But now if I am getting it at even more lower price, then the government can anytime revise this anti-subsidy duty. I hope I'm very, very clear with this. Yes. Acha. When is this countervailing duty not applicable? This will not be applicable when the imports are done by 100% EOU or SEZ, unless they are clearing it into DTA. If they are clearing it into DTA, then no option we are left with. Then in that case, countervailing duty will be applicable. Okay, and yes, this countervailing duty is in addition to all the other duties. Whatever duty we have studied, it is going to be in addition to it, and once it is levied, it will be valid for a period of 5 years plus 5 years, and plus it can also be levied retrospectively, means 90 days back also they can go and they can levy this countervailing duty on us. And whenever they feel that no countervailing duty is applicable, then the government can first do the provisional assessment. It can tell me to pay the taxes. In the meanwhile, the government will determine whether countervailing duty is payable or not payable. If it is payable, well and good, the government has already taken the amount. If it is not payable, then they will refund that amount of countervailing duty back to me. Manageable? Okay, so let's go to the last type of duty, that is our anti-dumping duty under section number 9A. Okay, very famous duty which they say. Now, whenever any article is exported by any country, okay, whenever any article is exported by any country into India at less than its normal value, okay, less than its normal value, then in such cases, central government has got the powers that it can levy something called as anti-dumping duty on its import. Okay, ma'am, how much amount of anti-dumping duty, etc., that we will study. Okay, now what was the main reason? What is the main difference between this section and the previous section? In the previous section also we were importing it from the other country, and at that time CVD on subsidized article or anti-subsidy duty was levied. But it was levied here, section number 9 was levied because the other country's government had given subsidy to its exporter. But in section number 9A, that is not happening. We are simply importing it from the other country at a very lower price. Okay, example, there is a company which is having a huge manufacturing facility. So can we say if it is having huge manufacturing facility, obviously its cost will be very less for manufacturing. If its cost will be less, then it can also export it to the other country at very low prices. And because of that, now we have started importing at a very high quantity. If we have started importing at a very high quantity, then can we say domestic market will get affected? So in such cases, anti-dumping duty is levied. Now, ma'am, how much amount of anti-dumping duty will be levied? There is a particular way of calculating this tax. So, either the margin of dumping, okay, margin of dumping or the injury margin, whichever is lower. Okay, margin of dumping or injury margin, whichever is lower, this is going to be the amount of anti-dumping duty. Now, what do you further mean by margin of dumping? Margin of dumping is nothing but the export price, the difference between export price and the normal value. Okay, export price means the actual price at which we have now received the goods, or normal price is the price at which they would have given to our country. Okay, the normal value is the selling price at which it is sold in ordinary course of business. Okay, so normal value minus the export price, this is called as the margin of dumping. Let's say they would have normally given it to us at 100 rupees, for example, and this time they have exported it to me at 80 rupees, for example. So the margin of dumping is equal to 20 rupees. Okay, this is per product I am talking. Okay, or what do you mean by injury margin? So injury margin is nothing but the fair selling price. Okay, that is the non-injurious price, means with this price we do not have any problem, means this is not causing any injury to our country. Fair selling price, non-injurious price minus the landed value of our imports. Okay, fair selling price. What do you mean by fair selling price? Fair selling price is the price of that product. Okay, fair selling price is the price of that particular product which is expected to have been charged under normal circumstances in the Indian market during the period defined. That is, during this period, at what price the product can be sold in India. Okay, that is, you will recover your cost plus you will recover your profit at that price. At that price means at what such price can you sell it in India normally, which is not an injury. So let's say for example, that fair selling price, that is non-injurious price, comes to 150 rupees. And landed value means at what price have we actually imported it into India. That is your basic value of import plus the custom duty plus the social welfare surcharge. Okay, let's say now we have imported, if you do all the calculation, let's say it comes to 60 rupees for example, then this difference, that is 90 rupees, will be considered as the injury margin. Okay, so this margin of dumping or injury margin, whichever is lower. Okay, I'll tell you once again. Now let's say if some country has dumped its products into India at a very low prices, because of which the domestic markets have got affected, so anti-dumping duty can be levied by the central government. Anti-dumping duty is equal to margin of dumping or injury margin, whichever is lower. What do you mean by margin of dumping? Margin of dumping is nothing but normal selling price minus the export price. Means at what price do they normally sell and at what price now they have exported. You will take this difference. Okay, or injury margin is nothing but the fair selling price. Achha, from your exam point of view, I am telling you everything will be given to you. You just have to apply it properly. Okay, fair selling price minus the landed value. Okay, please try to understand, landed value is nothing but the value as per custom plus the basic custom duty plus the other duties under customs. Means please don't add IGST and GST compensation cess. Okay, this is going to give me my landed value. Out of this, whichever is lower will be considered as the anti-dumping duty. Yes, this much amount can be levied. Acha, again, if you try to fool the government, okay, by altering the name of the article or altering the description of the article or importing it into unassembled manner, and you're trying to say, no, sir, there is no anti-dumping, then in that case, if the government is of the opinion that you're trying to fool the government, then they can levy this anti-dumping duty on you. Yes. Okay, then after that another point here is, what if they have taken this anti-dumping duty from us and later if we are able to prove to the department, sir, there was no anti-dumping, then in that case whatever was the excess duty that we have paid to the government, we can take it as a refund. Okay, absorption of anti-dumping duty, that is, if after levying this anti-dumping duty, can we say the other country will get affected? Because now we will stop doing our imports from them. So if they further reduce the prices, then the government can also further increase the anti-dumping duty, absorption of anti-dumping duty that we had done in the last point. Then non-applicability of anti-dumping duty that we have already studied, that was about when it is imported by 100% EOU or SEZ, then it will not be applicable except when it is cleared into DTA. Or provisional anti-dumping duty. Provisional anti-dumping duty means first they will levy the amount of taxes, and then they will do the provisional assessment, and then the final assessment will be done, and accordingly they will either take more amount from us or they will give us the refund. And then the next point is talking about imposition of duty with retrospective effect, that is 90 days in advance they can levy, and duration of anti-dumping duty, that is 5 years plus 5 years. All these provisions are same as the previous one, that is as per section number 9. Okay, what is more important here is, please try to understand. See, section number 3.1 was talking about excise duty. Okay, to compensate the excise. Section number 3.3 was talking about raw material, excise duty on raw material. Okay, section number 3.5 was talking about my VAT. Okay, VAT, local taxes, maximum of up to 4%. Then we started with our section number 8B. 8B was talking about that safeguard duty when bulk import was happening into our country. So up to normal quantity, normal custom duty will be applicable. In excess, the safeguard duty will be applicable. This is what we had studied. Then in case of anti-subsidy duty, as the name suggests, the other country had given subsidy to its exporter, so we were getting the we were getting the goods at discounted prices. So here, whatever is the amount of subsidy that was provided to the other government, to the other country's exporter by the other country's government, that much amount of anti-subsidy duty can be levied. And the last one is anti-dumping duty, where because of more production in a particular country, if they are dumping the goods into our country at very low prices, then at the time of import, anti-dumping duty can also become applicable. Manageable till here? Yes. And then the last two sections, that is section number 9B and section number 9C, that is your anti-subsidy duty. Okay, anti-subsidy duty and anti-dumping duty cannot be levied at the same point of time. Okay, it cannot be levied together because of same reason. Okay, because of same situation of dumping or export subsidization. Because of this, let's say if the other country, if we are, we are importing at a very high quantity from the other country, then in that case, if you are levying anti-subsidy duty, then for the same reason, anti-dumping duty cannot be levied. Right? Acha, then these duties cannot be levied just because. Now let's say the other country's government has exempted certain taxes. Okay, the other country's government has exempted certain taxes. So can we say because of that, again the selling price of that product would have reduced? If selling price of that product would have reduced, so can we say if we are importing it from the other country, even my import price will be reduced? So just because the other country's government has given some tax benefits because of which we are able to import it at a reduced price, just because of that, countervailing duty or anti-dumping duty cannot be made applicable. It can be made applicable because of subsidy given, but it cannot be made applicable because of any tax benefits given. Okay, similarly, when you are importing it from a member country of World Trade Organization or from a country with whom India has got a very good agreement, okay, most favored nation agreement, if we are importing from such country, then please don't levy such duties. Right? And another thing is these duties can be levied. Okay, these duties can be levied only if it is causing injury to the domestic market, not otherwise. Right? And the last one, that is your section number 9C. Section number 9C talks about the appeal procedures. That is, whenever we are not satisfied with with any such sort of duties which have been levied, then in that case we can go and file an appeal before the CESTAT. Okay, CESTAT, that is Customs, Excise and Service Tax Appellate Tribunal, with a fee that you need to make an application. Along with that, you need to pay a fee of 15,000 rupees. Once you go and make an application for an appeal or for any rectification, then the final decision, first of all, you will have to go within a time period of 90 days. Okay, you have to go within a time period of 90 days, and this 90 days can be extended also by the CESTAT in some special circumstances. And after that, the CESTAT, okay, just like you have GST 80, similarly here the CESTAT is going to give the decision. Yes, either it can confirm the order, it can modify, it can review, it can do any such thing, whatever it wants to do, if we are not satisfied with the decisions given under section number 8B, 9, 9A and 9. Simple till here, manageable everyone. Different types of duties we have studied. Yes, the most important duty on which you can get the question in the exam is your anti-dumping duty. Okay, please remember that anti-dumping duty. Anti-dumping duty is lower of dumping margin or injury margin, whichever is lower, right? And then the way we calculated that dumping margin, injury margin, we have question given in the question bank. Please refer it. Yes, done. Can we go ahead to the further chapter, everyone? Yes, okay. Chalo, then let's go to the next chapter. Now, I'm not taking up valuations as of now. We'll directly go to warehousing. Let's do one or two small chapters in between so that, you will start getting more confident about it. Let's go to the next chapter, which talks about warehousing provisions. Okay. Now, in customs, warehousing is very important. Why it is important? Because what is the facility given by the customs law is, once you are importing the goods, you can keep the goods in the warehouse for some time and later you can clear it from the warehouse. So how does it affect the taxability? The taxability is the customs duty will be applicable not at the time when you are depositing the goods into the warehouse, but when you are going to clear the goods from the warehouse, at that time the customs duty will be applicable. Okay, now you can keep your goods into warehouse. Now what type of warehouses are there? So mainly there are three types of warehouse. One is a private warehouse, next is a public warehouse, and third one is a special warehouse. Okay, when we talk about private warehouse and public warehouse, this is not under the customs law. Okay, this is not under the customs law. So customs authority is not going to have a physical control over those warehouses, but it will just be having a digital control over the warehouse. That is, as from the records maintained, from the books of accounts maintained, it can check the goods which are kept in these warehouses. But when we talk about the special warehouse is such a warehouse which is under the customs law. So this is under the proper control, okay, physical control of the proper officer. Okay, now what do you mean by private warehouse? What do you mean by a public warehouse? So private warehouse, private means it is specifically private to me, that is only my goods will be kept. Okay, and public warehouse means where goods relating to multiple importers can be kept there. And special warehouses only, so those warehouse where the proper officer will say that we need to store the goods in this special warehouse, or it is a high value item like gold, silver or any precious metals, etc. We need to store it because it has a very high value, so those goods will be stored in the special warehouse. Okay, now generally in these warehouses, there will be a warehouse keeper. Okay, we are required to appoint a warehouse keeper who is going to, maintain all the records and all those things. And for this warehouse, we are required to take the license. Okay, we are required to take the license from the principal commissioner or the commissioner. They only grant us the license, and they themselves have the power to cancel our license if we do any contravention of the provisions. Okay, obviously before cancelling the license of the warehouse, they will give us the opportunity. But still, if my license is cancelled, then in that case, whatever goods are kept, okay, what is the importer required to do? If his goods are kept in such warehouse, then he will have to move his goods from one warehouse to another, or he will have to either export it from the warehouse, or he will have to clear it for home consumption within a time period of next 7 days. Yes, this is what we are required to do once my license of warehouse is cancelled. Okay, now listen. Now, can we say by the time or till the time the goods are kept in the warehouse, till that time the goods are still untaxed? Right, under customs, the goods are still untaxed. The government has not got the custom duty, because the government is going to get the custom duty only once we clear the goods from the warehouse. So what will the government do? Government will tell me to please execute a bond. Okay, government wants safety, government wants security. So what is the government doing? Government will tell me that please execute a bond wherein you will write, that if I do any contravention, then please invoke this bond and please realize the money. Okay, now how much amount of bond are we required to give? So whatever goods are kept in the warehouse, on those goods calculate the tax payable and 3 times of the duty. Okay, 3 times of the duty means whatever is the duty payable on those goods, 3 times of that. Okay, why 3 times? 1x of the duty payable, 1x of the penalty payable, and 1x for other charges, interest, etc. So this way 3x of the duty payable, just keep this much amount. Okay, just keep this much amount, just give this much amount of bond to the department, and then the department will allow you to keep the goods in the warehouse. Okay, now suppose if you are just importing one particular consignment. Okay, then for that particular consignment you can give a consignment bond. Okay, you can give a consignment bond which is equivalent to 3 times of the duty. Right, but if you are a regular importer, okay, then you can give a general bond which is nothing but a running bond. Okay, of some ad hoc amount you can keep on giving the bond, and and whenever you clear the goods from the warehouse, then whatever is the tax payable, that gets adjusted from this running bond, from this general bond, right? Okay, now see, now another point is permission for removal of goods for deposit in the warehouse. Now can we say the goods are going to go from the port to the warehouse? So who will give this permission? This permission will be given by the proper officer, that okay, now the valuation of the goods etc. have been done. We have filed the into bond bill of entry. Okay, into bond bill of entry means depositing the goods into the warehouse. Once we file the into bond bill of entry, and once we give that consignment bond or the running bond, after that the proper officer will give the permission and we can deposit the goods into the warehouse. Okay, now once we have deposited the goods into the warehouse, for how much time can we keep those goods in the warehouse? So you can keep it for a limited time. Okay, you can keep it for a limited time. Now see, please try to understand, where there are certain warehouses where you can even do manufacturing. Okay, means what you will do is you are importing some raw materials, you are doing the manufacturing in the warehouse itself, and then you will export it from the warehouse itself. That is one kind of a thing. So where manufacturing is permitted in your warehouse, then you can keep the goods in the warehouse till their ex-bonding. Okay, till their ex-bonding means till you file the bill of entry for home consumption, till that time you can keep. There is no time limit for that. Okay, in all the other cases, in case of EOU, EHTP, STP also you can keep it till their ex-bonding. Okay, but in all the other cases, example, when if you are not a EOU, EHTP, STP, or if there is no manufacturing permitted in such type of warehouse, then in such cases you can keep the goods in the warehouse for a period of 1 year from the date of permitting. Okay, when the proper officer permitted for removal of goods from that custom station, from the customs port for depositing in the warehouse. Whenever the proper officer passed this particular order, from that day for a period of 1 year, it can be kept in the warehouse. Yes, acha, this period of 1 year can be further extended by the principal commissioner or commissioner by another period of 1 more year. So 1 year plus 1 year is the total time period for which you can keep the goods into the warehouse. But yes, definitely this time period will be reduced if your products are nearing expiry, or if the shelf life of the product is very less, then the time period can be reduced. Okay, now see, so this was a time period for which you can keep the goods into the warehouse. Now talking about the interest, okay, interest on the warehoused goods. Now please try to understand, see, whenever manufacturing is permitted, then till what time can you keep the goods into the warehouse? You can keep it till ex bonding, okay, or if you are a EOU, EHTP, STPs, etc., then also you can keep it till your ex bonding. So in such cases, there will be no interest applicable. Okay, but in other cases means when you were allowed to keep the goods for a period of 1 year or further extendable by another 1 year, then they are telling you can keep the goods into warehouse for a period of 1 year, no doubt. But in that also, in this period of 1 year, for the first 90 days, you can keep it interest free. Okay, but later, if you plan to keep beyond 90 days, then in that case, you will have to pay interest at the rate of 15% on the duty. Okay, means whatever is the duty payable on that, please pay the interest at the rate of 15% after a period of 90 days. Are you clear with this? Yes. Acha. Now, in some cases, the CBIC can waive off this interest. Okay, otherwise normally for the first 90 days, you can keep the goods in the warehouse without any interest, and after that the interest is going to start. Acha, what if the goods are duty free? What if the goods are duty free? If there is no duty payable, then obviously there will be no interest payable. Okay, penalty is different. Penalty is generally ad hoc, but interest is always calculated on duty. So if there is no duty payable, then there cannot be any interest payable. Also, that was decided in Pratibha processors. This case law is multiple times getting repeated. Acha. Now listen, please try to understand, please try to recollect from our first chapter when we had studied in section number 15, which dates rate of duty will be applicable in case of warehouse goods. So whenever we are removing the goods from the warehouse and whenever we pass the bill of entry, whenever we file the bill of entry for home consumption, on that day, whatever is the rate of duty, that rate of duty we are going to consider. Okay, but let's say for example, the department allowed you to deposit the goods for a time period of 1 year in the warehouse. It did not give you any extension. Okay, let's say you were allowed to deposit the goods into the warehouse for a period of 1 year. Now let's say you did not remove the goods from the warehouse at the end of this 1 year. Then it will be deemed, it will be assumed as if the goods are improperly removed. Okay, it is deemed as if the goods are improperly removed, and in case of improper removal, which date's rate of custom duty is applicable? The date on which the permitted period comes to an end. Okay, that is the day when this 1 year time period or any extended time period, whenever it comes to an end, that date's rate of custom duty will be applicable. Okay, but what if you removed it properly within the prescribed time? Then the day when you file the bill of entry, okay, that date's rate of duty will be applicable. Manageable till here? Yes. Okay, that was given here in case of Kesoram Rayan. That Kesoram Rayan, I think we did a question on this in RTP May 2026. That suppose if the goods are not removed from the warehouse even after the expiry of the permitted period, then it will be considered as if the goods have been improperly removed. And in case of improper removal, the rate of duty will be applicable, which is there on the last day when you should have removed the goods. Manageable till here? Okay, then going on to the next one, that is section number 64. Now, when your goods are kept in the warehouse, what is the owner's right? Okay, or what is the importer's right? What can the importer do? So, the importer can inspect the goods. He can go and check the goods, that if the goods are not deteriorated, that the goods are not damaged. He can sort the goods. He can show the goods for sale. Okay, he cannot simply remove the goods, but he can show it, he can sort it, he can check the goods, he can do all such things. If he wants to remove the goods or if he wants to give samples out of those goods, then please pay the custom duty and you can remove the goods. Manageable till here? Yes. Okay, then after that the next section, that is section number 65 and 66, which talks about manufacturing operations in the warehouse. Many a times it happens that you import the raw material, you do the manufacturing in the warehouse itself, and then from there either you export the goods or you clear it into DTA. Okay, if you export the goods, then anyway you are doing a very good thing. So whatever was the custom duty payable on the imported goods, that is not required to be paid. Okay, so no duty. Duties are fully remitted on the imported material. That is, whatever you had imported, on that you are not required to pay any duty. Okay, but if you are clearing the goods, into the domestic market, then normal import duty is also payable, interest is also payable, fine, penalty, everything is payable on those quantity of goods that you are clearing it into DT. Okay, so basically if you have imported something, kept it in the warehouse, manufactured it and then exported it, then duty is exempted. Okay, import duty is exempted. But if you are clearing it into the domestic market, then tax will be payable, right? Acha, then similarly the next one, which is talking about your waste and scrap. Okay, now let's say if you have imported certain raw materials and you are doing some manufacturing activity in the warehouse itself, and there is some waste or scrap that is generated. So what about the taxability of such waste and scrap? So taxability of such waste and scrap will depend upon what did you do with the finished goods. Okay, so if the finished goods are exported, okay, if you exported the finished goods, very good, then whatever is your waste or scrap, see, if you are destroying it, can you see these words? I'll just remove these markings, you will understand it properly. If you imported certain raw materials, okay, you are doing the manufacturing in the warehouse, and then there is some waste, scrap or refuse, etc. that is derived out of it. Now, what are you supposed to do? If the finished goods are exported, okay, and if the scrap is destroyed, then anyway there is no tax payable on this, okay, and plus the import duty shall be remitted. Okay, import duty shall be remitted, means there is no tax payable on this waste or scrap. Acha, what if that waste or scrap is sold in DTA? Finished goods are exported, but waste or scrap is sold in DTA. Then in that case, only on this waste and scrap, import duty will be payable. At what percentage it will be payable? At the percentage which is applicable to the waste. Okay, similarly, what if the finished goods are sold in DTA? If the finished goods are sold in DTA and waste etc. is also sold in DTA, then in such cases, now import duty will be levied at such percentage which is applicable on such imported goods. Hey, see, what is taxable now? Can we say in all the cases waste and scrap is taxable? But here the waste and scrap was taxable at what rate? At the rate which is applicable to the waste. But in the last case, the waste and scrap will be taxable at the rate which was applicable on the imported goods. Let's say I have imported some metal. Okay, and there is some metal scrap which is generated out of it. So now, and this after processing, I am selling the finished goods also in DTA. Then on this metal scrap, the rate which is applicable on the metal, that will be taxable. Okay, but here, if I have exported the metal and the metal scrap is sold in the DTA, then the rate will be applicable which is applicable on the metal scrap. Manageable till here? Yes. Okay, I've given the example here. Then going on to the next section here, that is section number 66. We were doing two sections, no? 65 and 66. Okay, 65 and 66 is a very logical section. Now here they are telling that, let's say you are importing a particular item. Okay, let's say I am importing some plastic. Let's say I am importing some plastic body. Okay, let's say I'm importing a plastic body for manufacturing a AC remote. And when you're importing this plastic body, the customs duty applicable is at the rate of 30%, for example. Okay, but later I checked that if I would have imported the AC remote, then the rate of duty applicable is only 10%. Means the rate on raw material is higher than the finished product rate. Then in that case, can we say the importer will say, oh God, instead of this, I could have imported the AC remote itself. At least the rate of duty is less. So in such cases, the central government has got the powers that it can exempt the imported material from the import duty from whole or part of the custom duty. So either the government can make it 0 or the government can even reduce this to 10%. Manageable till here? Yes. Okay. Then after that, going to the next section, section number 67, 68 and 69. Now, in which all manners can we remove the goods from the warehouse? So either you can transfer the goods from one warehouse to another, that we have already studied. Okay. Whenever you are transferring the goods from one warehouse to another, obviously proper officer permission will be required, and you have to record all these things in your books of accounts. Okay. Another thing is you can get it cleared for home consumption. That is, simply file the bill of entry. Right, simply file the bill of entry, pay the duty, pay the interest, pay the penalty if any, and you can clear it for home consumption. Right, and the third one is you can even clear it for export. That is, after keeping it in the warehouse, maybe you can do the manufacturing, and from there itself you can export it, no problem. Okay, all these things are permitted. These are the three ways. Okay, these are the three ways in which the goods can be removed. Okay, then after that, another section is section number 70. Section number 70 talks about allowance in respect of volatile goods. Now, let's say you had deposited some goods. Okay, let's say kerosene kind of goods you had deposited in the warehouse, and let's say the quantity was 1 lakh liters, for example. Okay, but kerosene is such a product which gets evaporated, right? And so now when you were removing the goods from the warehouse, this quantity had come down to 80,000 liters. Can we say the quantity has reduced? Okay, this is not a loss, destruction, pilferage. This is nothing of that sort. But can we say here this reduction in quantity is due to nature of the product? This is due to volatility nature of the product. So in this case, the proper officer has the powers that it can allow you to pay the tax on 80,000 liters instead of 1 lakh liter. It has got the powers that it can tell you to pay the taxes on the lower. Are you clear with this? Yes. Okay. Then going on to the next one, that is section number 71 and 72. 71 and 72, improper removal of goods from the warehouse. So we have already studied what are the three ways in which we can remove the goods from the warehouse. Either you can transfer it from one warehouse to another, or you can clear it for home consumption, or you can export. If you are removing by any other method, then it is considered as improper removal. Okay, or let's say whatever was the time period given to you for keeping the goods into the warehouse, let's say 1 year time period, and if you did not remove the goods till that time, then also it is considered as what? Then also it is considered as improper removal. Right, then in such cases notice will be issued by the proper officer to that person, to the owner of the goods, that boss, you have done some improper removal, please pay the taxes, duties, whatever, and interest, penalty, etc. Please pay all of those things. Right? Acha, what if I have properly removed the goods, paid the taxes, etc.? Then do you recollect we had given some consignment bond or the general bond? So what will happen? Can we say the bond will get cancelled? Okay, if everything I have done properly, I have already paid the taxes to the government, interest, penalty, everything is done, I have removed the goods from the warehouse, I have filed the bill of entry, if everything is done, now whatever bond was there with the government, now we will simply cancel it. Right? Then custody and removal of warehouse goods. This we already know that in the warehouse we are required to appoint a person called as warehouse keeper, who is going to discharge all the functions on our behalf. He is going to maintain all the records, how much goods are coming into the warehouse, how much are going, on how much goods have we paid the taxes. All these details are required to be maintained by the warehouse keeper. Warehouse keeper is just acting as an intermediary. Okay, he is just acting on behalf of the importer, but actually who is liable? Who is liable to pay the duty? The licensee. Okay, the importer is liable to pay the duty, interest, fine, penalty, etc. And yes, this warehouse keeper was also required to maintain the records, na? How much goods have been received, how much have been removed, etc. These copies are required to be maintained for a period of 5 years from the date of removal of goods from the warehouse. So whenever, see, till the time when the goods are in warehouse, they have to maintain the details. Even after a period of 5 years, they have to maintain it. Even for a period of next 5 years, they have to keep these details preserved with them. Manageable till here, everyone? Yes, so this was all about my warehousing chapter. Manageable, simple. Yes, here what is more important? Here what is more important is, first of all, for how much time can you keep the goods stored in the warehouse? So interest fee so normally you can store it for a period of 1 year, plus this can be extended by another 1 year, and the first 90 days, okay, out of this 1 year, the first 90 days you can keep the goods in your warehouse without payment of interest. After this period of 90 days, interest will be applicable at the rate of 15% on the duty payable. Yes, acha. Normally when you remove the goods from the warehouse, okay, at what rate are you required to pay the customs duty? The rate which is prevalent on the date of filing the bill of entry. But if it is a case of improper removal, then whatever was the last date Okay, when the goods should have been removed on that last day, whatever was the rate of custom duty, at that rate you are required to pay the customs. Manageable till here? Yes. Okay, it's done, done, everyone. Okay, let's go to the next chapter, that is refunds under customs. Okay, refunds under GST is huge, right? But refunds under customs is very, very small, very, very simple. Yes, so now whenever you have exported any goods, okay, let's say for example, whenever you have exported any goods, on payment of IGST, you have paid the IGST, you have exported the goods, then generally you get the refund of that IGST back. Okay, or if you have done the export without payment of IGST, that is by signing bond or LUT, then in that case, on your outward supply, you have not paid any taxes, but on your inward supply, they will give you the input tax credit. This is what we have already studied under refunds under GST. Okay, now how does the process for refund under customs happens, or in which circumstances do you get the refund duty? Okay, or do you get the refund of duty under customs? So whenever you have by mistakenly paid excess amount of taxes, duties, etc., then you will get the refund of the same. Or when the person has borne the burden of that tax. Okay, if I have borne the burden of that tax and the tax was not payable, then in such cases I will get the refund of that duty. Okay, now refund will be granted only if the amount is more than or equal to 100 rupees. Otherwise, don't even come for the refund. Whenever you are applying for the refund, first of all, you are required to make a refund application, which should be made within a specific time period. Okay, now this refund application should be done within a time period of 1 year from certain dates. Okay, now let's say if the refund is claimed by any person other than the importer. Okay, importer had imported the goods, then he sold to someone else, and this someone else is now clearing the goods, etc. He is paying the duty and he wants to now claim the refund of the duty. So 1 year from the day when he purchased the goods. Okay, 1 year from the day when he purchased the goods, from that 1 year he is required to file the refund application. Okay, or if I am taking the exemption of duty which was given to me by way of a special order. Do you recollect general exemption, special exemption? So if I have got some duty refund because of special exemption given to me, then whatever was the date of such exemption order, from that day within a time period of 1 year, go and file the refund application. Or if refund is arising because of some appeal, okay, I had gone for some appeal and now the refund is arising. So whenever their decision was given by the appellate authorities, from that day within a period of 1 year, I should go and make the refund application. Okay, or if when I have done some provisional payment of duty, we will study this in importation and exportation. Whenever we have done any provisional payment of duty under section 18 and that provisional payment of duty is excessively done, then I would want to claim the refund. So in that case, whatever is the date of adjustment of duty after final assessment or reassessment, okay, whenever the duty is finally adjusted, then from that day within a time period of 1 year, go and make the refund application. This also we will study section number 18A, that is when refund is arising due to revised entry or amendment of documents under section 149. Then in that case, whenever I had paid that duty or interest, from that day within a time period of 1 year, go and make the refund application. Okay, this is nothing but what? This is nothing but the time period within which we are required to go and make the refund application. Okay, but there is no time period applicable whenever you have paid any duty under protest. Okay, now what do you mean by duty under protest? Duty under protest is, let's say there was some tax payable. Okay, you filed the bill of entry and as per you the tax payable was less, but as per the department the tax payable was more. Okay, but you desperately wanted to get your goods cleared for home consumption. So you thought that, okay, first I will pay the duty. Okay, whatever higher amount they are asking, I will pay for that duty and later I will take a refund. Means I am telling to the department, sir, I am not agreeing to your calculation, but for the timing I am just paying the duty and later I will come back and take the refund from you. That is called as payment of duty under protest. So whenever I have paid the duty under protest, later I will fight with the department and I would like to take my refund. So in that case, whenever you go and file the refund application, there is no time limit for filing the refund application. Okay, why no time limit? Because you have already paid the duty under protest. You have already paid the higher amount of duty to the department. Yes, okay. Now see, once your refund application reaches the department, after that they will check it. They will check whether the provisions of unjust enrichment is there or not there, and accordingly they will give you the amount of refund. Okay, normally the refund goes in the consumer welfare fund. Do you recollect this? Normally the refund amount is credited to the consumer welfare fund, but in some cases, if there is no unjust enrichment, okay, if there is no unjust enrichment, means I have not passed on the benefit to anyone else, I am the one who has suffered the burden of the taxes, then in such cases the amount will be credited to my bank account. Okay, so whenever I have borne the burden of the tax and I am able to prove it to the department, sir, I have not passed on this to anyone else, I am the one who has suffered, then in that case the refund amount will be credited to me and it will not be credited to the consumer welfare fund. Okay, now once you apply for the refund, then they will check your refund application along with all the necessary documents, etc., and they are required to refund it to you. Okay, so whenever they receive your refund application, okay, whenever they receive your refund application, from that day within 3 months they are required to give you the refund. If they are not able to give the refund to you within a time period of 3 months, then after that they are required to pay you interest at the rate of 6% per annum. Okay, normally the rate of interest was 5%, between 5% to 30%, but as of now they have fixed it at 6% per annum. So for the first 3 months they can keep your refund even without giving you the interest, but if there is a delay beyond 3 months, then they will have to give you the refund also, plus they will have to give you the interest also from the expiry of this 3 months. I hope I'm very clear with this. Similarly, when your refund was decided, okay, when your refund was decided by way of an appeal, then whenever the decision of appeal came within 3 months, they should give you the refund. If they do not give you the refund within 3 months, then interest meter will start at the rate of 6%. Manageable till here. Okay, then two important sections here, that is section number 26 and section number 26A. Section 26 talks about refund of export duty. I hope you can see here on the board, refund of export duty. Okay, now what do you mean by refund of export duty? Now let's say if you had exported certain goods, okay, by paying some export duty, you had exported certain goods and those goods are returned back to us. Okay, let's say normal sales return. Okay, normal sales return means the other party did not accept your goods. Then whatever export duty you had paid, you will get a refund of the same. Okay, or when you had exported the goods, but now the goods are re-imported within a time period of 1 year. Okay, then in that case, again you will get the refund of the export duty paid. Okay, and application for refund of such duty is made before the expiry of 6 months from the date on which proper officer makes an order for clearance of the goods. That is, whenever the goods were cleared, from that day within 6 months, you should make a refund application. Then in such cases, the refund of export duty will be granted to you. Right, now another section. So 26 was not very important, but 26A, yes, 26A is going to be very important. 26A talks about refund of import duty in certain cases. Okay, now let's say if you have imported certain goods, okay, and after importing you have found out that the goods are defective or the goods are not as per your specification and these goods are of no use to you now. Okay, or in such cases, what you can do is either you can re-export it back, okay, or you can relinquish the title, you can abandon the goods, etc. Right? Or if so if the goods are defective or not as per the specification, and if you are able to satisfy it to the assistant commissioner of the customs or the deputy commissioner that these are the goods which were imported, but I do not need these goods and I have not claimed any duty drawback on these goods, I have not taken any other benefit of taxes on these goods, and then the importer either exports the goods or relinquishes the title or destroys such goods, then in such cases the duty will be remitted. That is, no need to pay the import duty on such goods. Okay, but this exporting the goods back or relinquishing the title or destruction of the goods should happen within how much time? So whenever the proper officer has passed the order for clearance for home consumption, from that day within a time period of 30 days. Okay, within a time period of 30 days, either I should export the goods back or I should relinquish the title or I should destroy the goods within a time period of 30 days, and this period can be extended by another period of 3 months. right? But obviously these should be not such goods which have committed offense. Okay, it should not be such goods which have committed offense. Here basically I am not satisfied with the quality of the goods, and hence either I am re-exporting it back or I am relinquishing the title. So the department is telling that no need to pay the import duty on that. And later, if you have already paid the import duty, then you can apply for a refund, and a refund application should be made within a time period of 6 months from these relevant date. Okay, so whenever you have exported the goods back, then whenever the export order was made by the proper officer, from that day within 6 months, please make the refund application. If you have relinquished the title, then whenever you have relinquished the goods, from that day within 6 months, please file the refund application. Or whenever the goods have been destroyed, commercially destroyed, then whatever was your date of destruction, from that day within 6 months, please go and make a refund application. Then only we will be able to grant you the refund. Are you clear with this? Yes, this is in case of import duty. Okay, this is in case of import duty. Acha, normally before this, when we had studied about the refund, in which case were we getting the refund? When I had paid the duty in excess, or I am the person who had borne the burden of the duty and I am eligible for a refund, then I can go and apply for the refund, right? And the last point here, which was decided in Priya Blue Industries Limited also, that let's say for example, whenever I have paid, okay, whenever I have paid any customs duty to the department, okay, and the department later on says that no, this much amount of duty is not payable, something more than this is payable, okay, something more than this is payable, then in such a case, what will happen is, if you are not agreeing with the deputy commissioner or the assistant commissioner, then you can go and file an appeal. Okay, now what happened in case of Priya Blue Industries Limited was, what happened in such a case was, the assessee had some as per the assessee, there was some refund due from the department. Okay, but the department passed an assessment order, and department said that so and so amount of tax is payable. Okay, as per the assessee, there is some refund receivable, but as per the department, there is some tax payable by the assessee. So what should the assessee should have ideally done? The assessee should have gone for an appeal against the assessment order. Okay, appeal can be filed within a time period of 60 days. Okay, you can go and file an appeal within a time period of 60 days. But the assessee did not go by that method. What did the assessee do was, assessee directly went and filed a refund application. See, as per my calculation, refund was due. Okay, and as per the department's order, as per the department's assessment order, tax was payable. So can we say there is a disagreement between me and the department? So what I should have done actually was, I should have gone and filed an appeal. But I did not go and file an appeal. What I did was, I directly went and filed a refund application. So here the Supreme Court held that, boss, you cannot directly, bypass all the procedures and directly go and file the refund application. If you want to apply for a refund, then first win the case. First, the order of the proper officer should be there for a refund. As of now, his order is of the tax payable. So first go for an appeal, win the appeal, get a refund order, and then only you can make an refund application. Okay, so you cannot refund a claim. Refund claim is not considered as an appeal procedures, right? So refund claim cannot be a substitute for appeal. Yes, this was decided in Priya Blue Industries Limited. Manageable till here, everyone? Yes, understandable. Now, ma'am, what is important in this chapter? So first of all, this 3 months time period is important here. That is, whenever you do the refund application, interest will be paid to you only if you do not get a refund even after a period of 3 months. Then only you will get the interest at the rate of 6% per annum. This is one thing. Okay, another point important here is time period within which we should do the refund application. So this 1 year from so and so dates is the time period. Okay, but remember, for duty paid under protest, there is no time limit for going and making an application for the refund claim. And the next one is, yes, Priya Blue Industries Limited, very, very important. In the question bank also you will find questions on this. So just be careful with that. Okay, and another one is, when you were exporting the goods or relinquishing the title, then no import duty will be payable. And if you have paid any import duty, then you can claim for a refund for that by making an application within a time period of 6 months from the date of that event. Yes, manageable till here, everyone? Okay, done. Okay, so let's start ahead with importation and exportation of goods. Let's start with this. Now, the chapter is little lengthy. If you check the ICAI material also, the chapter is little lengthy. Yes, but worth doing it because it looks big, but it is actually very, very simple. And you will, like, we generally see one question coming from this chapter because it is important. Okay, we'll study about different procedures, provisions in this chapter. Let's start with it. Okay, in the beginning, they have given some definitions which are not really very important. I'll tell you the meanings as and when it comes. Okay, now very common terms which are getting used in the chapter is, one is something called as bill of entry. Okay, bill of entry, we know that it is such a document which the importer is required to file with the customs authority either like before the goods arrive into India. Before that, he has to file the bill of entry in which he will submit the details of his products which are coming into India, the goods which are coming into India. He will calculate the duty on that and he will pay the duty, right? So, bill of entry is such a document which is required to be filed when we are importing any goods by way of vessel or aircraft. Okay, by vessel or by aircraft, when the goods are coming, we will use a document called as bill of entry. Okay, next, bill of export. Bill of export we are going to file when we are exporting the goods by land. And when we are exporting the goods by vessel or air, at that time we are going to use the document called as shipping bill. Okay, these are the very three common documents, common terms which we are going to use in the chapter. Okay, now listen. Now there is another definition which we need to study, that is called as person in charge. Okay, person in charge in relation to vessel is the master of the vessel. In case of aircraft, it is the commander or the pilot in charge of the aircraft. In case of train, it will be the conductor, guard or any other person, and any other conveyance, it is going to be the driver. Means these are the people who are bringing that particular aircraft into India or taking that aircraft from outside India. Example, in case of aircraft, it will be the pilot. In case of vessel, it will be the master of the vessel, so on and so forth. Okay, now from here your main section starts, that is section number 29. Section number 29 talks about arrival of vessels and aircraft in India. Now here basically they are telling that whenever any vessel or aircraft is coming into India, they cannot bring their vessel. Okay, they cannot land their vessel or they cannot sail their vessel at any place other than the customs port or the customs airport. Okay, means you have to park, you have to land your particular conveyance only at designated customs port or airport unless you are permitted by the CBIC. Okay, if you do so, if you land it at some other place, that is any other place other than the designated place, then it will be considered as if you are bringing some illegal goods, right? Acha, but there are certain exceptions, that suppose if there is any accident or if there is any weather stress or any other unavoidable cause, then you can land your aircraft or you can bring your vessel at such place which is other than the customs port or the customs airport. But as soon as you do that, you will have to inform to the nearest customs officer or to the police officer that, sir, so and so circumstances happened and that's why I have brought my vessel or the aircraft at such other places, and you cannot do unloading of goods or unloading of passengers before you have informed it to the particular authorities. But again, if there is a case of health, safety, preservation of life, etc., then in that case you can do the unloading of goods and passengers, but otherwise you cannot land it at any other place other than the customs port or customs airport. Okay, then after that there is another set of documents that is coming. Check what is the next set of documents that is coming. Something called as arrival manifest, import manifest or import report. Okay, now this is filed by the person in charge. Okay, this is not filed by the importer, this is filed by the person in charge of that conveyance. So arrival manifest is generally filed in case of passengers. Import manifest is generally filed when we are importing some goods by way of vessel or aircraft, and import report is generally filed whenever the goods or passengers are coming by land. Okay, now see, whenever passengers are coming into India, then the person in charge is required to file a document called as arrival manifest, in which he will give the details of all the passengers coming into India. Similarly, when the goods are coming into India by way of vessel or aircraft, V/A is nothing but vessel or aircraft. When the goods are coming by vessel or aircraft, then the person in charge is required to file the import manifest, in which he will give the details that we are coming into India by way of vessel or aircraft, or we are bringing so and so goods into India by way of vessel or aircraft. And whenever we are bringing something by way of land, at that time the person in charge is required to file the whenever we are coming by land, we are required to file the import report. Okay, so here basically the person in charge is filing. This is not for the purpose of payment of custom duty. This is just to inform to the proper officer that the vehicle or that vessel or that aircraft is coming into India. And only when they file these, okay, only when they file this, only after that they will get the entry inwards. Means only after that the person in charge will get the entry inwards that okay, now you can come into India. Okay, now in case of import manifest and in case of arrival manifest, this has to be filed in advance. Okay, this will be filed in advance by the person in charge. But when the goods are coming by land, then even after the goods have come by land, within 12 hours, you can file it at the custom station that we have brought so and so things along with us by way of land. Okay, for all these things, who is responsible? Not the importer, but the person in charge of that particular conveyance will be responsible. Okay, example, let's say there is a vessel which is coming into India. So whoever is that master of the vessel is required to file the import manifest. This is generally filed electronically, and this they will have to file in advance. That is prior to them entering into the Indian waters, they will have to file it saying that this vessel is coming into India. Then only the customs officer will come to know, na, okay, now something is coming into India, now we have to do the assessment and all those things which are coming into India. Okay, and if they do not file it, then the person in charge will be liable for the penalty. Okay, now similarly, just like we studied here, this is about the arrival manifest, that is passenger and crew arrival manifest and passenger name record. That is whenever any conveyance is coming into India with passengers and with its crew, okay, then in such cases they are required to file this arrival manifest which contains the details of the passengers. Okay, what is the name of the passenger, from where they are coming, etc. These details are required to be filed online. Yes, again, if they do not file it, who will be responsible? The person in charge will be responsible, and they will be liable for a penalty not exceeding rupees 50,000. Okay, then another point is about the vessel. Section number 31 talks about vessel. Now, whenever any vessel is coming into India, we have already studied, whenever a vessel is coming into India, we are required to file a document. The person in charge is required to file a document called as import manifest. Along with import manifest, okay, along with import manifest, the master of the vessel is also required to make an application. Okay, he is also required to make an application for entry inwards. Means he will apply to the customs authority, sir, please grant us the entry inwards so that we can come into India. Okay, and then the date of whenever the customs officer or whenever the proper officer allows, then that date will be considered as the date of entry inwards. And do you recollect when we had done section number 15, date of entry inwards is important. Yes, so whenever the goods are coming by way of vessel, along with filing the import manifest, the master of the vessel is also required to apply for entry inwards. Okay, and this entry inwards is not applicable for aircrafts and for vehicles. Okay, it is applicable only for vessel. So master of the vessel is required to file this import manifest, plus he has to do the application for entry inwards, that please allow us to come into India and please grant us the entry inwards. Okay, Acha, till the time you don't get the entry inwards. Okay, till the time you don't get the entry inwards, you cannot land your vehicle or you cannot bring your vessel into India. Acha, then in this import manifest, the master of the vessel is also required to mention whatever goods he is bringing along with himself. Okay, first he will mention the details about the vessel, plus he will also mention the details of whatever goods he is bringing from the other country to India. If the details of the goods are not mentioned in the import manifest, then you cannot do the unloading into India. Yes, so whenever you are, any document, be it import manifest, be it import report, be it arrival manifest, whatever details are mentioned in these documents should actually match at the time of unloading. If it does not matches, then the proper officer will not allow you to do the unloading. Okay, now unloading, loading, whatever happens at which places? It can happen only at customs port, customs airport or customs station. Okay, it cannot happen at any other place. Next, loading, unloading can happen only under the supervision. Okay, only under the supervision of the proper officer. This loading unloading cannot be done on Sundays and other holidays as observed by the customs department. If you want to get your goods loaded or unloaded on on Sundays or after the working hours, then do you recollect, we are required to pay something called as merchant overtime charges, which I had taught you in exemptions chapter, and this merchant overtime charges is totally exempted from GST. Yes. Okay, and then after that, going on to the next section, that is section number 35. Section number 35 is the little important. Section 35 basically talks about boat note. Okay, it talks about boat note. Now, what happens is generally, whenever there is a vessel coming into India, okay, this is applicable only for vessel. Whenever there is a vessel coming into India, let's say it is a huge vessel which is coming into India, or let's say it is carrying some hazardous goods with itself, and it is not possible to berth that vessel at the port, means it is not possible to kind of park that vessel at the port. Then what is the facility given? That in mid waters itself, okay, in mid waters itself, the goods can be unloaded from that big vessel into small boats. Okay, because that big vessel could not be parked at the port, so in mid waters itself, the goods will be transferred from the big vessel to the small boats. And but this unloading can be done only if the boat note document is present. Okay, only if the boat note document is present with the master of the vessel, only then the unloading can be done in middle of the sea. Otherwise, it cannot be done. Okay, in some cases, the CBIC can allow the unloading to be done without a boat note, but otherwise, whenever you are unloading it from big vessel to a small boat, then in such cases it should be accompanied by a boat note. Otherwise, it is not allowed. Okay. Those small boats are called as what? Those small boats are called as lighters. Okay, those small boats are called as lighters. That was given in section number 35. Okay, so till here basically my basic procedures for importation is done. Now for importation is done. Now how to get the goods cleared? Okay, now the onus is going to shift on the importer. Importer is required to file the bill of entry, pay the duty, how to pay the duty, etc. That we are going to study now. Yes. So let's continue with the procedure for clearance of imported goods. Now, whatever procedures we are studying here, these are not applicable for baggage, because for baggage anyway separate procedures are applicable. And whenever you are importing something by way of post, okay, by postal department, if you are importing something, then that procedure is also totally separate, which we are going to do it separately. Yes. Now, let's start with the next few sections, everyone. Section number 45 talks about restriction on custody and removal of imported goods. Now they are telling that before you clear the goods either for home consumption or for warehousing, then in such cases, till the time you clear it, the custody of the goods is going to be with the custodian, or the possession of the goods is going to be with the custodian. And that's why we had already studied in section number 13 that before clearance, before the proper officer makes an order for clearance, before that if there is any pilferage that is happening, then the custodian will be liable. So the custodian is required to make a proper order. Okay, he is required to maintain a full details that how many goods were there, how much was unloaded, and he will not allow you to remove the goods or part with the goods unless you have paid the duty or you have filed the bill of entry, etc. So basically the custody is going to be there with the custodian. Okay, but there was a case law, you will find it in the question answers also, that if it was decided in Board of Trustees versus Union of India, that if the custodian is the Port Trust of India, then they are not liable to pay the duty in case of any pilferage. Okay, normally they say that in case of pilferage, the custodian is liable to pay the duty. See, importer is not at all liable because he was not at all, he was not having the possession of the goods at all. Absolutely, yes. But here they are, shedding off their responsibility that if the custodian is the Port Trust of India, then they are also not liable. Means basically, the goods are also gone, goods are also pilfered, plus the customs department is not even going to get the duty on the sea. Then going on to the next section, section number 46, which is important. Now this is the responsibility of the importer. Okay, what is the responsibility of the importer? It is the duty of the importer to file the bill of entry. Okay, to file the bill of entry on the customs portal, that is the ICAI portal. He will have to go and he will have to apply, he will have to submit the bill of entry. Okay, bill of entry is not required for transit and transshipment, which we will study later. But otherwise, whenever you want to, clear your goods for home consumption, or whenever you want to deposit your goods into the warehouse, or after depositing it into the warehouse, now you want to clear it for home consumption, then in all such cases, the bill of entry will be required. Okay, now bill of entry, there are different types of bill of entries, like I mentioned now. Yes. Now, what will be mentioned in this bill of entry? So, all the details about the description of the goods, what packages have you imported, how many number of packages are there, then what is the HSN code for that, what is the rate of duty applicable on your products, everything will be mentioned, and you have to submit the bill of entry along with the copy of your invoice. Okay, now in some cases, if the importer is not able to furnish the details, okay, means the goods have come into India or the goods are going to come into India, and I want to clear the goods for warehouse or I want to clear the goods for home consumption, either of it, but I am not able to submit the bill of entry because I am not having the proper details available with me. Then in such cases, there is a concept called as warehousing without warehousing. Okay, that is, you wish to clear the goods for home consumption, you wish to clear the goods for warehousing, but you are not able to file the bill of entry. Why you are not able to file the bill of entry? Because maybe you do not have certain details or some clarification is not there, you do not know which HSN code is applicable, you will come to know only after the goods arrive that how many goods have come, etc. Then in that case you can request the proper officer that, sir, please deposit my goods into public warehouse. See, here when you are depositing the goods into public warehouse, that does not mean that you want to warehouse the goods. Okay, you just want to temporarily keep the goods into the warehouse. See, when the goods come into India, okay, you have to clear it within 30 days. If you do not clear the goods within 30 days, then it is liable for auction. Okay, now, and you cannot clear it without filing a bill of entry. Now, I am not able to file the bill of entry. And if I am not able to file the bill of entry for next 30 days, they will sell my goods. Plus, they will also levy demurrage charges because I am, wasting their space, etc. I am not getting my goods cleared. So, I can request the proper officer, sir, please keep my goods into the public warehouse temporarily till I am not able to submit the details. So, that is called as warehousing without warehousing. Means here, you are not going to deposit the goods into the warehouse. Like permanently, you did not want it to get the goods cleared for warehouse, but for temporary period, you are just keeping, because you do not have the necessary information for filing the bill of entry, you just request them to keep it into the warehouse. This we will study towards the end. You can keep it into this warehouse for 30 days, which can be extended for another period of 30 days. If the proper officer allows you to do warehousing without warehousing, then you will not be required to pay the demurrage charges. They will take some warehouse rent from you, but that is way too lower than the demurrage charges. Manageable till here. Okay, the next point, again very, very important, that what is the time limit? What is the time limit for filing the bill of entry? Okay, so now bill of entry can be filed in advance. Okay, 30 days prior, whenever whatever is your expected date of arrival of aircraft, vessel, vehicle, whenever it is going to come into India, 30 days prior to that, you can go and file the bill of entry online. Okay, but latest it should be filed one day before. Let's say if my vehicle or vessel or aircraft is coming today, then yesterday, okay, or let's say it is going to come tomorrow, for example, then by today, end of the day, okay, basically last day, okay, if it is going to come tomorrow, then by today's end of the day, it should be filed compulsorily. If you are not filing it, okay, if it is not presented, then in that case, you will have to pay. Now, late presentation is also allowed, but for that, you will have to pay the extra charges. Okay, so in advance, 30 days prior to the expected date you can file, but maximum it should be filed one day before the arrival, end of the day, one day before the, even if it is a holiday, doesn't matter, it has to be filed by one day prior. Yes. Okay. Now listen. Now going on to the next section. Next few sections are going to be very, very important. Section number 17, which talks about assessment of goods. Okay. Now generally in customs also we have got self-assessment only. That is, once you file the bill of entry. Okay. Once you file the bill of entry, in that you declare the details of the goods, the value of the goods, the rate of duty applicable, and you pay the duty. Okay. You self-assess the duty, you pay the duty, etc. So now your bill of entry plus the payment is already done. Okay, payment of custom duty is already done. Then it will be verified by the proper officer. If everything is okay, he will allow you to clear the goods. Okay, or he can select your case on selective basis and he can do the verification. Means he might not trust your bill of entry. If it is found that everything is proper, then no problem. If proper officer finds that no, you have not done the self-assessment properly, then in such cases, he can do the reassessment. Okay, you have already done the self-assessment. If that is not proper, the proper officer can do the reassessment, and reassessment has to be done within a time period of, means final order. See, first, whenever reassessment is done, after that he will pass the final order within a time period of 15 days from this reassessment. Now, because of reassessment, there can be some more tax payable by you, so you will have to pay that tax along with interest. Yes. Acha. Now listen. Now what are they telling us here? What are they telling us here? Your next section is talking about a very, very important section because it has amendments also for your examinations. Next section is section number 18, which talks about provisional assessment, temporary assessment. Okay, now suppose if the importer or the exporter is not able to do the self-assessment and he requests to the officer, sir, I am not able to do, you only do the assessment. So the proper officer will take your case for provisional assessment. Okay, or if the proper officer is of the opinion that I need to test these goods, I need to do some chemical test on these goods, then before clearing the goods, he will do the provisional assessment. Or if the proper office, or if the importer or exporter has produced all the necessary documents, but the proper officer is of the opinion that I need to do some inquiry. Okay, or if I have not submitted the proper documents, but and the proper officer is of the opinion that some inquiry is required. In all these cases, provisional assessment can be done. It is not mandatory, but it may be done by the proper officer. Okay, and whenever the proper officer does the payment, whenever he does the payment, we are required to give some security. Okay, we means the importer exporter is required to give some security. Okay, now see, as per provisional assessment, whatever is the tax payable, that we have to pay, plus the proper officer can ask for some bond or for some extra security to safeguard the interest of the revenue, and he will keep on calling for documents after he has done the provisional assessment. Because see, first he will do the provisional assessment, and after that he will take some time and then he will do the final assessment. So once the provisional assessment is done, after that he will keep on calling for the documents, information from us, and finally he will do the final assessment. Okay, now whenever he has done the provisional assessment, from that day, within a time period of 2 years, he should complete the final assessment. Okay, and this 2 years can be extended by another period of 1 year by the principal commissioner or the commissioner of custom. So basically, whenever the provisional assessment is done, okay, this was the amendment. Whenever the provisional assessment is done, from that time period, within 2 years, the final assessment should be done. That is, the final duty should be assessed, and this 2 years time period can be extended by another 1 year. Achha, but sometimes it can so happen that proper officer is not able to finalize the assessment. Why? Because maybe he requires some information from outside India through a legal process and it is taking some time, or maybe the matter is in appeal before the courts, or maybe there was a stay order passed against the assessee, or maybe the CBIC has told to keep the matter pending, or any other reason, because of any other reason, if the proper officer is not able to finalize the assessment within this 2 years plus 1 year, because of these reasons, then in such cases, whenever these reasons cease to exist, example, whenever the stay order is removed, as soon as the stay order is removed, after that, please complete the assessment within a time period of 2 years or extended period of 1 year. Okay, so normal time period is 2 years from provisional assessment, but in case of this, we are not able to complete the assessment. So whenever these reasons come to an end, from that day, within 2 years plus 1 year, please complete the final assessment. Okay, now listen. Whenever they are doing the final assessment, and if they come to know that we have paid some short taxes, okay, we have paid some less taxes, then now we are required to pay the deficiency. Whenever we are going to clear the goods for home consumption and they come to know that there was some short tax that was paid, so now please pay the deficiency along with interest and get your goods cleared. Okay, but if we have already paid some excess taxes, okay, means in provisional assessment itself we have paid some excess taxes, then in such cases, what is going to happen? We are going to get the refund. Okay, we are going to get the refund. In case of home consumption, if we have paid some excess taxes, then you can get the refund. Okay, interest, etc. I'll tell you in that. In case of deficiency also, you are required to pay the interest. In case of refund also, you are going to get the interest. And once this, payment of tax, etc. is completed, then you can get your goods cleared. Achha, but in case of warehousing, if you have paid something less, okay, Achha, first of all, in case of warehousing, did we pay any taxes or we had just signed a bond? Do you recollect? Whenever you want to get the goods cleared for warehouse, you don't pay the tax now. Just you sign a bond, right? Do you recollect? You sign a bond of 3x of the amount. Yes. Okay. Now, now can I say I would have already given a bond which is equivalent to 3x of the duty amount. Now, if they are determining that the tax amount is more, okay, now if they are determining that the tax amount is more, so whatever is the deficiency, okay, whatever is the differential amount multiplied by 2 times, okay, it is written here, multiplied by 2 times, please give extra bond of this much amount. Okay, in case of warehousing, we are not required to pay anything now because we will pay when we clear the goods for home consumption. So just whatever is the differential duty, pay 2 times of it. See, first time when you are signing the bond, you have to pay 3 times of the duty. Okay, but in case of provisional assessment, whenever there is any deficiency in the tax paid, okay, then whatever is the differential duty multiplied by 2x, please give extra bond of this amount. Acha, now suppose if there is any deficiency, that is more tax was payable because of the final assessment, then you are required to pay the interest also at the rate of 15%. And this interest, very important, this interest will be payable from the first day of the month in which the duty is provisionally assessed till the date of payment. In GST, when the GST was provisionally assessed, okay, interest was payable from the original due date till the date of payment. Means whatever was the original date of that supply, from that due date till the date of payment, the interest was payable at the rate of 18%. In customs, this interest is payable at the rate of 15% from the first day of the month in which the duty is provisionally assessed till the actual date of payment. Okay, you will find questions on this, please be careful. Acha, suppose if you are eligible for refund and if they are not giving you the refund within a time period of 3 months from the date of assessment or the date of final assessment, if they are not giving you the refund within a time period of 3 months, then they will pay you interest at the rate of 6% after this 3 months till the day they give you the refund. Okay, there in case of GST, whenever we were getting a refund in case of provisional assessment, then first we had to make the application for refund within and then within 60 days, if they do not give you the interest, if they do not give you the refund, then from the 61st day they will give you the interest. But here they waited for a time period of 3 months from the date of final assessment. If you are not getting the refund within 3 months, then from the next day onwards they will give you interest at the rate of 6%. Manageable till here? Yes. And whenever they are giving you the refund, okay, whenever they are giving you the refund, they will see if there is no unjust enrichment. If there is unjust enrichment, that is if you have actually borne the burden of the tax, then only they will credit it to your bank account. Otherwise, they will credit it to the consumer welfare fund. Manageable till here? Yes. So this section was very important, which was talking about provisional assessment. Yes, this had amendment also. So please give special weightage to this. Okay, now I'm directly going on to the provisional assessment regulations. This section I will come to it after this rules regulations are done. Okay, so now customs finalization, because this is in continuation of the provisional assessment section. Yes, so basically whenever the provisional assessment is done, whenever the proper officer has done the provisional assessment, after that now he has to complete the final assessment within 2 years plus 1 year. So as soon as he does the provisional assessment, after that he will ask for documents within 15 days. When he asks for document, we have to submit it within 2 months, which can be extended by another 2 months, but max to max we should submit it overall within 12 months from the provisional assessment, because only when we submit our documents to the proper officer, only then he will be able to complete the provisional assessment into final assessment. Yes. Acha, once we submit the documents within 12 months from the date of provisional assessment, then he will complete the final assessment within 2 years from the date of provisional assessment, which can be extended by another period of 1 year. These are the procedures which are given, not very important, but yes, we have just studied it once. Yes. Then going on to the next section, that is section number 18A. Section number 18A talks about voluntary revision of entry post clearance. Okay, now suppose if the good, you have filed the bill of entry and your goods have been cleared. Okay, later the importer or the exporter wants to change some details in that bill of entry. Now see, the goods have been already cleared, the duty payment has been already done, but now you wish to change some details in the bill of entry. So they have given you an option to revise the bill of entry. Okay, they have given an option to revise the bill of entry. Now, whenever you are revising the bill of entry, can we say there can be changes in the amount of duty payable? There can be some changes in the amount of duty payable. If there is any changes in the amount of duty payable, then you will have to pay that. Yes. That is, if there is any differential amount payable, then please pay that amount voluntarily along with interest. That is at the rate of 15%. Please pay the interest also plus the duty also. Acha, suppose if you have already paid some excess taxes, then you will get the refund of the same. Do you recollect we had studied this in the refund under customs chapter? First page that table was there. Last line I had told you that amendment thing was written. That is, whenever there was any changes in the entry, then refund application has to be done within a time period of 1 year from the date of payment of the duty. So whenever the payment of duty was done originally, from that day within 1 year, within a time period of 1 year, you will have to make a refund application and you will get the refund. Yes. Acha. Then after that, now once you revise the entry, after that, normally either it will go for self-assessment, that is system will automatically allow you to do the revision, or in some cases on the basis of risk parameters, they can choose your case and the proper officer can check your revision. Okay, they can check your revision and they can take necessary actions on you. Now, very, very important 3 points here. The cases where revision is not allowed. Okay, where this section number 18A is not allowed. Suppose if any audit, search, seizure, etc. has been started against you. Now, if you tell to the department, I want to do revision. See, if audit, etc. has been started, then you will fear na, that the officer will come to know about something wrong. So, now you immediately go for revision. So, that is not allowed. Okay, now let them do the audit, let them do the search and seizure, and then they will only discover it. Okay, or if the proper officer has reassessed the duty under section 17 or assessed the duty provisionally under section 18 or under section or when in case of goods imported or exported by post or courier, in these cases also they are not allowing you to do the revision. Okay, why it will happen? Now, let's say for example, if you had done your self-assessment, and now the officer has chosen for reassessment. Okay, now the officer has chosen your case for reassessment. Then in such cases, the department is telling now you cannot go for revision. Okay, means now if you want to go against this reassessment, go and file the appeal. Okay, go and file the appeal, but you cannot go for revision. Yes, that's the reason. And last one, any other situations which is notified by the CBIC. In these 3 cases, this can be a probable question because this is a new section. So in these 3 cases, they will not allow you to do the revision under section number 18A. Yes. Okay. Then after that, 2 very, very simple provisions, which is talking about customs audit, section number 99A. So customs audit can be done. This is not a surprise audit. They will intimate you 15 days in advance. Audit commissionerates will intimate you 15 days in advance that they are going to come at your premises and they are going to conduct the audit. So for that purpose, we are required to preserve, under customs, we are required to preserve our records for a period of 5 years. And on risk assessment basis, they will choose you that we need to do the audit of yours. Yes. And the assistance of experts can be availed, means the department can take the help of CA, CW, IT professionals, etc. for the purpose of conducting the audit. Generally, there are 2 types of audit. One is transaction based audit and the other one is premise based audit. Transaction based audit means they are just going to check some transactions, and premise based audit is they would come to your premises, they will check the books of accounts, records, etc. whatever you have maintained in this premises, and on the basis of risk parameters they are going to select your cases. Okay, normally this audit is done by audit commissionerates, but along with audit commissionerates, executive commissionerates can also assist the audit commissionerates for doing the audit. Okay, not very important. Just read it once, right? Chalo. Then let's start with the next section, section number 47. Section number 47 basically says that if you want to get the goods cleared for home consumption, then first you need to pay and then you can clear. Means pay first, clear later. Yes, this is the normal fundamental. But in some cases, the customs officer, central government allows deferred payment also. That is, first you can clear and then you can do the payment. Okay, by default is first do the payment and then you can clear it. Okay, but in some cases they allow you deferred payment, in which cases deferred payment is allowed. So it is allowed to some importers who are certified under AEO program, Authorized Economic Operator, big importers, 2-tier AEO and 3-tier AU. For these people it is allowed that they can first clear the goods and then they can do the payment. And authorized public undertaking, these people, these two category of people are allowed that they can do the deferred payment. Okay, now deferred payment can be done, means how much delay in payment can be allowed. So whatever bill of entry is filed between 1st to 15th of any month, okay, between 1st of any month to 15th of any month, the payment has to be done by 16th of that month. Okay, so let's talk about the month of April, for example. So any bill of entry which is filed between 1st April to 15th April, the payment for that has to be done by 16th April. Similarly, if there is any bill of entry filed between 16th till the end of the month, then payment has to be done by 1st of the next month. So if there is any bill of entry filed between 16th April to 30 April, for example, the payment has to be done by 1st of May. Right, but only for the month of March there is an exception for the second half. That is, if there is any bill of entry filed between 16th March to 31st of March, payment has to be done by 31st of March. That is, don't take it to another year, just clear the payment within the same year itself. So this is the time period. Okay, this is the time period for doing the payment in case of deferred payment. Yes, otherwise all the other people, the day when they are presenting the bill of entry, they are required to do the payment, or maximum within a time period of 1 day. Okay, when in case of assessment, reassessment, provisional assessment, whenever the proper officer returns the bill of entry to that importer to do the payment, within 1 day that person has to ultimately do the payment. This is for normal people, but for AEO, 2-tier and 3-tier, and for public undertaking, they can do this deferred payment. They can use this facility and they can do the deferred payment. Generally, whatever payments are required to be done under customs has to be done electronically, unless the commissioner allows you to do the payment manually. Okay, now deferred payment facility will not be allowed to you. Okay, it will not be allowed to you if you do any default in payment. Means already advance facility was provided to you, means deferred facility was provided to you, and if you do a default in payment of that, then in that case the deferred payment facility will be withdrawn if you have done a default of more than once in 3 consecutive months. In 3 months, if you have defaulted more than once, then this facility will be withdrawn. Okay, but then there was a point inserted here was that if the payment for the bill of entry is done within the due date and the differential duty for the same bill of entry along with interest is done within 1 day, then in that case he will be allowed to do the deferred payment. Okay, he will be allowed to do the deferred payment. This is the provision for deferred payment basically. So in short, only two people are allowed the facility for deferred payment. What is the time limit for doing the deferred payment? That is this. And if you have defaulted more than once in 3 consecutive months, then the facility will not be allowed to you. Yes. Now, if he has paid the duty for a bill of entry within the due date and paid the differential duty for the same bill of entry along with interest on account of reassessment within 1 day, then we will allow him to continue to do the payment by way of deferred payment facility. Normally they are told that electronic payment is compulsory, that is using your electronic cash ledger, same as your GST, using your electronic cash ledger, etc. You can do the payment. Okay, but the commissioner can give the powers to do the payment manually also, but these people have to compulsorily do the payment electronically, that is AEO. Okay, the one who are given the deferred payment facility, those people have to do the payment electronically compulsorily, and per bill of entry. Okay, per bill of entry, if the custom duty is more than or equal to 10,000 rupees, then you have to do the payment electronically. There is no other way out. Okay, just like income tax, etc. Now in customs also, now they are starting with faceless assessment. You can just read it once, not very important. Okay, now here they have told you about the electronic cash ledger and electronic duty ledger. So normally whenever we want to do any payment under customs duty, just like your GST, here also we have got an electronic cash ledger. So you can credit that amount to the electronic cash ledger, and from this electronic cash ledger you can pay the customs duty, interest, penalty, fees, whatever is due you can pay from this ledger, and if there is any balance left out in this ledger, then that can be refunded back to you. Okay, now these people are even if they do not use electronic cash ledger, that is online payment basically, then also it is okay. That is in respect of baggage. For baggage, like it is brought by people like us, so we will not be obviously having any electronic cash ledger. So here the payment can be done like other than by way of electronic cash ledger, or if the payment is done at such custom station where automation has not yet done. Okay, so in that case, how will you do the payment? Through electronic cash ledger. These are the two cases mainly. Okay, these are the three cases mainly where even if you don't do the payment through electronic cash ledger, and then maybe by NEFT, RTGS, UPI, etc., you can do the payment. So one is where automated system is not there. For accompanied baggage, you are not required to use electronic cash ledger. And when you are doing any other payment, okay, when you're doing any other payment other than your customs duty, IGST, GST compensation cess, etc. Example, whenever you are furnishing any security to the customs authority, at that time you need not use your electronic cash ledger. Okay, now that was all about your cash ledger. Now here they have given you about the credit ledger. Now in customs also we have got something called as duty drawback, where you first pay the duty and then the department on certain goods they give you the duty drawback. Generally 98% of the duty drawback is given. So that duty drawback is credited to your credit ledger. Okay, duty credit ledger. And similarly under FTP, under the schemes called as ROTTEP and ROSTEL, you get some duty credits. Okay, you get some duty credit scripts, etc. So that is credited to the duty credit ledger, and this can be used for making the payment of custom duty. This is just like my electronic credit ledger. Yes, okay. Then after that, what if you do not get the goods cleared? Once your goods have come into India, you have to get it cleared within a time period of 30 days. I told you this. Okay, 30 days or the extended time period, or either you can, if you do not get it cleared, then it will be auctioned, or else you can relinquish the title to the goods. If such a thing happens, either if you're not getting it cleared within 30 days or if you relinquish the title, then the proper officer or the custodian is given the permission that after informing the importer about this, he can give the notice to sell the goods by auction. Okay, then it will be auction. Now in case of auction, again, I have not filed any bill of entry because I did not want to get the goods cleared. So in that case, the department is going to file the bill of entry. It will do the assessment of taxes on that, and whoever is now buying the goods under auction, he will be required to discharge the duty, and then he can clear the goods for home consumption. Okay, then section number 49, very simple, which we have already discussed, that is warehousing without warehousing, where I wanted to take the goods for home consumption, or I wanted to deposit the goods into warehouse. For that I needed to file the bill of entry, but I could not file the bill of entry because I did not have the information. So I requested to the department, sir, please allow me to temporarily keep the goods in the public warehouse for a period of 30 days plus another period of 30 days. Sir, please allow me to keep the goods here, and please do not levy demurrage charges. As soon as I receive the information, I will file the bill of entry accordingly, either for home consumption or for warehouse. So here they will not collect the demurrage charges. They will take the rental of a warehouse from you, but they will not take the demurrage charges from you, and they will allow you to warehouse the goods without making the warehousing provisions applicable. So in this case, are you required to sign the bond for warehousing now? No, because your warehousing provisions are not becoming applicable. Later, if I want to take the goods into the warehouse for keeping it there for 90 days, 1 year, whatever it is, then in that case, yes, then the bond etc. will be required. Manageable till here? Yes. So all these provisions, whatever we have studied till here, this is all about my importation. Yes, first part of the chapter is done. Big part of the chapter is done. Yes. Okay. Chalo, let's continue with exportation now. It is very, very simple. Yes, now whenever we are exporting, now the procedures are going to be totally reverse. Okay, now whoever is the person in charge, okay, whoever is the person in charge of that vessel, etc., that person will first make an application to the customs officer that, sir, please grant us entry outwards, that give me the permission that we can take our vessel outside India. This entry outwards is mainly required for vessel. It is not required for aircraft, and it is not required for vehicle, because till the time you do not apply for entry outwards and till the time you do not get the entry outwards, goods cannot be loaded on the vessel. Okay, so first the person in charge is required to apply for entry outwards. Okay, once he applies for entry outwards, okay, once he gets the permission for entry outwards, after that at least he can allow for loading of the goods. Okay, but before loading of the goods, the exporter is required to file the shipping bill or the bill of export or bill of transshipment. Okay, shipping bill we have already seen. Shipping bill is required in case of vessel and air, and bill of export is required in case of land. So the exporter is going to file this. If the goods are dutiable goods, he will have to pay the duty on that, and only after that the goods can be loaded. Okay, once all these things have been done, now first entry, generally this is the sequence. First entry outwards will be taken by the person in charge of the vessel. Then shipping bill or bill of export will be filed by the exporter. And after that, the proper officer, once he thinks that, okay, everything is proper, everything is done, then he will give the let export order. That is, he will give the final permission that, okay, now you can take the vehicle or vessel or aircraft outside India. Okay, till the time you have not got the entry inwards, loading cannot be done on the vessel. Okay, and similarly same thing is given here. Export goods not to be loaded unless duly passed by the proper officer. Acha, then after that, do you recollect? Similarly, in case of importation, we had discussed about arrival manifest, passenger manifest, import report manifest. Similarly, here same documents are required. Same documents are required to be filed by the person in charge. If he is taking some passenger outside India, he will have to file the departure manifest. If he is taking some goods by way of vessel or aircraft, he is required to file the export manifest. And along with export manifest, he will take the permission for entry outwards also. And in case of land, he is required to file the export report. If he does not file, then he will be responsible for that. Okay, similarly, if there are any passengers or crew going outside India, we have to submit their details also to the proper officer. And no conveyance is going to leave unless that let export order has been given by the proper officer. Then similarly, what is the procedure for clearance of export goods? So we are required to file the shipping bill or the bill of export. Shipping bill in case of vessel or air, and bill of export in case of land. So this has to be filed by the exporter electronically on the customs portal, and if there is any duty payable, we have to pay that duty, and only then, only after that, you will be allowed to export the goods. Okay, once all these things are done, after that the proper officer is going to give the let export order. Okay, entry outwards is done, export manifest is done, payment of duty, if any, is done. Only after that the let export order will be given by the proper officer. And suppose if we have submitted something in the bill of in the shipping bill or the bill of export, but that quantity does not matches with the actual exported quantity, then please inform it to the proper officer within 7 days. That, sir, example, I had written 1000 kgs in the shipping bill, but I could export only 900 kgs. So please inform this difference to the proper officer within a time period of 7 days. Okay, this was all about your exportation. Not very important. If you have studied your importation procedures properly, then this is not very important. Okay, then again they have given you the summary of import procedures and export procedures here. Manageable till here. Yes, then I'm going to the last part of the chapter, next part of the chapter, that is other parts, transit and transshipment, postage and stores. These parts we are going to deal with. Yes. Let's go to the next part of the chapter, that is talking about transit and transshipment. Just try to understand the provision. Yes, now whatever we are studying here, this is not applicable to baggage because separate provisions are applicable. It is not applicable to post because separate provisions are applicable, and it is not applicable to stores because separate provisions are applicable. Now, what do you mean by transit? And what do you mean by transshipment? Okay, so transit is covered under section 53, transshipment is covered under section number 54. So here they are telling that whenever there is any particular vessel, vehicle or aircraft which is coming into India, can we say the person in charge was filing some document for entry inwards? He was filing that arrival manifest, import manifest or the import report, and he was going to mention the details of goods that he was bringing from the other country. Okay, now imagine there is a vessel. Okay, imagine there is a vessel which is coming from the other country to India, and then the same vessel is going to go outside India. Okay, same vessel is going to go outside India, just that it is passing through Indian waters. Then in such a case, and it is going to have a stop at the customs port, then in such a case, if there is no, if whatever goods are just coming into India and then going to go outside India, on that customs duty will be payable or customs duty will not be payable? No customs duty will be payable. Okay, let's say 1 lakh kgs. Okay, 1 lakh kgs of goods are coming into India, and then out of that 20,000 kgs will be unloaded in India, and balance 80,000 is going to go on the same conveyance outside India. Same conveyance is going to basically drop 20,000 here and 80,000 is going to go. So the question is, will there be any duty payable on that 80,000 kgs which is going outside India? So answer is no. This is called as transit. Okay, we know that 80,000 came into India but it did not get unloaded in India, and the same conveyance is taking that 80,000 outside India. So there will be no duty payable on that 80,000. But yes, obviously the 20,000 which is unloaded here, and if it is going to be get cleared in India, then on that we will have to pay the duty. So whenever the goods are getting transited in the same vessel or air, same vessel is coming and same vessel is going, or same aircraft is bringing the goods and same aircraft is taking the goods outside India, so whatever is going outside India, on that there will be no payment of duty. That is called as transit. Okay, now what do you mean by transshipment? In case of transshipment, the conveyance changes. Okay, the conveyance changes. So basically, if there are certain goods which are imported into India, which are intended for transshipment, okay, so for that purpose we are required to submit a bill called as bill of transshipment. Okay, we are required to submit a bill called as bill of transshipment. So now what is going to happen? What is going to happen here? First of all, the person in charge is going to file all the details about the goods which are going to come into India. Okay, and after that, let's say for example, there are certain goods which are coming from USA to India. Okay, and it is coming to, let's say, Mumbai port. Okay, let's say it is coming to Mumbai port. Now, there are going to be some goods which will be unloaded at the Mumbai port. Let's say 1 lakh kgs of goods will be unloaded at the Mumbai port. And from Mumbai port, I am going to change the conveyance, and I am going to take these goods from Mumbai port to Kolkata port, for example. So can we say here the vehicle is changing or the conveyance is changing here? If the conveyance is changing, then when it is getting transited from Mumbai to Kolkata, at that time there will be no customs duty applicable. Okay, this is called as what? This is called as transshipment. Okay, this is called as transshipment. Now, if it is going from India to India only, then for this transshipment, there is no custom duty applicable. But when it will be unloaded at Kolkata, okay, when it will be unloaded at Kolkata, then at that time, customs duty will be payable. Okay, alternatively, if let's say I have unloaded 1 lakh kgs at Mumbai, and then the conveyance is going to change, and then we are going to take this 1 lakh kgs to outside India, but in a different vehicle or a vessel. Then in that case, whatever is going outside India, on that there will be no custom duty payable, provided we have submitted the bill of transshipment. Yes, so basically difference between transit and transshipment is, in transit the conveyance is not changing. Okay, the goods are allowed to remain on the same conveyance and there is no need to pay any custom duty. So basically the records get continued. But whereas in case of transshipment, the conveyance changes. The goods are unloaded from one conveyance and then loaded onto another conveyance. So here there is no continuity of records. But in both the cases, if any goods are going outside India, either on the same conveyance or different, there is the transit or transshipment will be allowed without payment of duty. Manageable till here? Yes. Okay. Now see, 2 points which I wanted to tell you here. Where any goods are imported into a customs station and those are imported at a major port or the customs airport at Mumbai, Calcutta, Delhi or Chennai or any other customs port which has been notified, or to any other customs station, and the proper officer is satisfied that goods bona fide intended for transshipment to such customs station, the proper officer may allow the goods to be transshipped without payment of duty. Now see, imagine, listen to this example. Let's say the goods are coming from US to India. Okay, the goods are coming from US to India. Let's say 1 lakh kgs have been unloaded at the Mumbai port. Okay, and from Mumbai port, it is going to go to some small port. Okay, from Mumbai port, it is going to go to some small port. Then the customs officer can ask you to pay the duty at Mumbai port itself. Okay, but if it is going from Mumbai port to a major port or to a bigger port, then they can tell you to pay the duty at that bigger port. So basically, whenever they feel that there is a loss to the revenue, or there is a a risk of revenue, then they will tell you to pay the duty at the first port itself. Otherwise, you can pay it wherever you are getting your goods cleared. Yes, this was mainly all about your transit and transshipment. Then I am going to the next point, which is talking about your this thing. Postal articles, that is whenever you are importing any goods by post or courier. Okay, so whenever you are importing or exporting any goods by courier, then the person who is responsible to do all the things is the authorized courier or the postal department. Now, which dates rate of duty are you going to take? That is very, very important. Achha, before that, the procedure also. So whenever the goods come into India, okay, whenever the goods come into India, then the postal authority, okay, the postal authority is required to submit a list of goods which have come into India to the proper officer, that he will write that these many goods have come into India, and then the custom duty calculation and the payment of custom duty will be done. Now, which dates rate of duty are you going to take? Okay, so in case of import, the day when we are submitting the list, the postal authority is submitting the list to the custom authority, that date, or arrival of that conveyance, whichever is later, that date's rate of duty you are going to take for the purpose of import. And for export, the day when we are handing over, okay, the day when we are handing over the goods to the postal authority, on that day, whatever was the rate of custom duty, as per that we will have to pay the customs. Yes. This was the major provision for postage. Okay, so basically, whenever any goods are coming by post or courier, then they will do the filing of bill of entry and whatever documents is required. Not exactly the bill of entry, but the submitting of list, etc., will be done by the postal authority. What is more important is which dates rate are we going to take? Okay, now listen, do you recollect we had studied section number 15 where we studied about which dates rate of duty are we going to take, okay, for warehousing, for home consumption, but there we had studied that provision was not applicable for postage and baggage. Okay, so for baggage, the day when we file the baggage declaration form, that date rate of duty we are going to take. And in case of postage, when you are importing any goods, the day when that list was submitted to the department, to the customs department, or the arrival of the vessel, whichever is later, that date's rate we are going to take. And in case of export of goods by way of post, then the day when we are handing over our goods to the postal authority, that date's rate we are going to take. Yes, okay. Then the last provision, which is talking about stores. Okay, now stores means your normal stores like food, drinks, life-saving equipments, jackets, all those things, oxygen cylinders, etc. Now, can we say these are generally kept on the vessel, right? These are generally kept in the vessel, or these are generally kept in the aircraft, and we will use it if required. Okay, we will use it if it is required. So now, whenever there is any vessel which is coming, or any aircraft which is coming into India, okay, which is coming with some goods in India, then duty is payable on those goods, but duty is not payable on the stores which are coming into India. So what can the incoming vessel or the aircraft do is, whenever they are bringing any goods, whenever they are bringing their conveyance into India, these stores can be kept into the warehouse. Okay, these stores can be kept into the warehouse without any payment of duty, because duty will be applicable on the goods, but duty will not be applicable on the stores. And they can, when the vessel or the vehicle, when the vessel or the aircraft is leaving from India, then they can again take the stores on board. Okay, so basically, in case of transit also and in case of transshipment also, the stores can remain in India without any payment of duty. Okay, that is very, very important. Another thing, similarly, if it is consumed, okay, if it is consumed, then also there is no custom duty that is payable. So see, what are they telling? If there are any imported stores on board a vessel or an aircraft, it may, without payment of duty, be consumed during the period such vessel is the foreign going vessel or aircraft. So ultimately, if the vessel or aircraft is going to go outside India, either you can keep it or you can even consume it without payment of duty. But as soon as that vessel turns into a local vessel or a local aircraft, then in that case, duty will be chargeable on the stores which are there on board. Let's say there is a particular vessel which is going to terminate its journey in India itself, and then if something is consumed, then on that the duty will be payable. Okay, generally what happens is, suppose if from India we are providing some stores, okay, if we are selling some stores to a foreign going vessel or foreign going aircraft, then this is considered as deemed export. So on this you pay the customs duty, and then you get the 100% duty drawback. Okay, if you are providing any stores to the foreign going vessel, you pay the customs duty and then you will get 100% duty drawback. Or alternatively, exactly the concept of duty drawback is such that whenever India is providing some stores to the foreign going vessel or aircraft, this will be considered as deemed export. So don't pay any duty, and whenever India would have purchased it, okay, any person in India would have purchased it, at that time he would have paid some taxes on that, he will get 100% duty drawback of the same. And similarly, when this is provided to Indian Navy, okay, this can be provided to the Indian Navy without payment of duty. Okay, if Indian Navy is consuming it, okay, then even if it is consuming in India, there will be no customs duty applicable on the same. Okay, generally we do not have the provisions in our syllabus, but generally whenever we get the duty drawback, we get 98% of the duty drawback. Okay, but whenever it is provided to a foreign going vessel, you will get 100% duty drawback in such cases. Yes. Okay, so this was mainly all about the stores provision, and now the last provision, that is the baggage provision. Yes. Okay, so let's start with the baggage provisions. So baggage provisions in our book, it is covered in importation and exportation of goods under customs. Okay, so we'll do baggage provision separately, because under baggage we have got the effect of ICAI revised corrigendum also. So we'll do it specifically. So whenever you are bringing baggage, okay, whenever you are importing baggage, it is not considered as import of goods. It is specifically considered as import of baggage. Okay, do you recollect when we were doing section number 15 and 16, we had studied that whatever was the date on which rate we were calculating the customs duty, that was not applicable to baggage and imports by post. Do you recollect that? So whenever baggage is coming into India, the owner is required to give a declaration of whatever he is bringing along with him in the baggage. That is, he is required to file something called as baggage declaration form. Okay, let's say we are coming from other country to India. Okay, at that time we are required to file something called as baggage declaration form, in which we will declare that do we have anything on which customs duty is payable. Okay, now first of all, which dates rate of duty are we going to take? Okay, which dates rate of duty are we going to take in case of baggage? So the day when we are filing the baggage declaration form, okay, the day when we are filing the baggage declaration form, on that date, whatever is the rate of duty, that will be applicable. Okay, now another thing, rate of duty on baggage. Okay, what will be the rate of duty in case of baggage? So the rate of duty is going to be 35%. Okay, now what the ICAI has done is, like basically first the amendment happened in the law, and later the ICAI also made it applicable by way of revised corrigendum, that social welfare surcharge is not applicable in case of baggage. Okay, social welfare surcharge is not applicable in case of baggage, and hence the effective rate of duty in case of baggage is going to be 35%. Earlier it was 38.5, now it is going to be 35%. That is going to be the rate percentage of duty in case of baggage. Yes, suppose if there is any rate change, then which dates rate are we going to take? The date when we are filing the baggage declaration form, that will be the effective date for calculating the customs rate of duty. Okay, now there are certain items we will study ahead. There are certain items like firearms, guns, etc. Then cartridges of the firearms exceeding 50, cigarettes, cigars or tobacco in excess of some quantity prescribed, etc. When you are importing this, okay, when you are importing this, then in such cases, on these items, means excess of the limits, okay, that is when cartridges of firearms is imported exceeding 50, or when cigarette sticks are imported exceeding 100, etc. Then there was a separate rate applicable, that was 100% under heading number 9803, HSN 9803, but now this has been changed and this has been brought down to 70%. Okay, normal baggage, normal by default baggage percentage now is 35%, and on the heading 9803 items, that is firearms, cartridges of firearm exceeding 100, exceeding 50, cigarettes exceeding 100, etc. On this earlier it was 100%, now the rate is going to be 70% with no social welfare surcharge. Manageable till here? Okay, now you get some duty exemptions in case of baggage, that is some things you can bring without payment of duty. Okay, first of all, as per a notification, they had told that one laptop computer, okay, one laptop computer, that can be a notebook computer also, one laptop computer can be imported duty free by a passenger, okay, not by a crew member, only by a passenger whose age is more than or equal to 18 years. Okay, that person can bring one laptop computer, whatever be its value, 1 lakh, 2 lakh, 3 lakh, doesn't matter, but one laptop computer he can bring with himself, no issues in that. Okay, apart from that, baggage rules 2016 tells us that you can bring articles worth this much amount duty free. Now see, rule number 3 says that this is applicable to an Indian resident, people like you and me, or a foreigner residing in India, or a tourist of Indian origin who is coming to India from any country other than Nepal, Bhutan and Myanmar. Okay, then he can bring his used personal effects, yes, used clothes, etc. He can bring some travel souvenirs, yes, and he can bring articles, excluding articles mentioned in Annexure 1. Annexure 1 is that firearms, cartridges exceeding 50 and all that. Apart from that, you can bring other articles, but up to what value? Up to rupees 50,000. Okay, similarly, if there is a tourist of foreign origin coming to India, tourist of foreign origin who is coming to India from any country other than Nepal, Bhutan or Myanmar, then they can bring used personal effects, travel souvenirs, but other items, but only up to rupees 15,000. Infant means child whose age is up to 2 years. He can bring personal effects. He cannot bring travel souvenirs. How would he bring? And he cannot bring other articles. So only his used clothes can be there along with him. And you cannot club. These limits are individually available to each person. Okay, this is individually available to each person. So when an Indian person or a foreigner residing in India or a tourist of Indian origin, when they are coming to India, they can bring used effects, used personal effects, travel souvenirs and up to 50,000. Foreigner coming to India, okay, to foreign origin person coming to India, 15,000. Infant can just bring the used personal effects. Acha, if these people are coming from Nepal, Bhutan or Myanmar, that is Indian resident or foreign resident residing in India, or a tourist who is coming from Nepal, Bhutan or Myanmar, he can bring all, but articles only up to 15,000. Infant can bring only personal effects, nothing else. And passenger who is arriving by land, because we are connected by land with these countries. So if they are coming by land, then they can just get used personal effects and nothing else. Manageable till here? Yes? Okay. Now, these personal effects, when we talk about personal effects, here personal effects does not include jewelry. This personal effects is altogether different. So, jewelry allowance, how much is the jewelry allowance? That is given in rule number 5. So, if you are a passenger who has resided abroad for more than 1 year, okay, and if you're coming from any country, then a male person can bring jewelry up to 20 grams with a value cap of 50,000, and ladies will be double, that is weight up to 40 grams or value up to 1 lakh. Up to this value, they can bring the jewelry duty free. If they are bringing anything more than that, then normal 35% tax will be applicable, provided they have stayed abroad for a period of more than 1 year. Manageable till here? Yes. Okay. Now later we will see, okay, for the upcoming exams, that is for September 26 and ahead, we will see amendments here, because now they have done the amendments. They have removed the value cap. Okay, considering the prices of gold and silver which have gone up in the last few days, in the last few months, they have removed the amount cap. So we will study the amendment, but anyway, this is the provision. Okay, this is the provision for the May 26 examination. Acha, now sometimes it can so happen that, okay, as per rule number 6, they are telling that suppose if you are shifting your residence from the other country to India, then can we say you will bring so much things along with you? You will bring your old TV, you will bring your old oven, refrigerator, etc. also along with you. Then in such cases, how much is the allowance that you're going to get? So if you have stayed abroad for 3 months to 6 months, then you can bring personal and household articles, Okay, personal and household articles, plus you can bring annexure 3 articles. Okay, we will study about annexure 3 articles, not to be by hearted. All these things you can bring up to rupees 60,000, provided you are an Indian passenger. Okay, but if you have stayed abroad for 6 months to 1 year, then you can bring the same thing up to rupees 1 lakh. If you have stayed abroad for 1 year to 2 years, then you can bring all these things, but up to rupees 2 lakh, provided you should not have availed this concession during any of the last 3 years. Okay, means you have not taken this benefit in the last 3 years. Okay, or if you have stayed at least for a period of 2 years or more, then you can bring the value duty free up to rupees 5 lakh, provided you have stayed abroad for a period of at least 2 years. In the last 2 years, you have stayed abroad for at least last 2 years. Okay, there can be some shortfall. Okay, in this 2 years, there can be some shortfall which can be condoned by the commissioner, no problem in that. Okay, then your total stay in India or short visit during the last 2 years should not exceed 6 months. Means maximum time you should be staying outside India, and in the last 2 years, you should not have visited India for more than 6 months. But here also the shortfall can be condoned, and the passenger should not have availed this concession in the last 3 years. Then this is the amount. That you can bring duty free along with you. Right? Currency, how much currency can you bring? For that, go and check the FEMA regulations. Acha, now, sometimes it can so happen that the passenger has come and the baggage, either he will send in advance or he will bring it later. So even that is allowed, provided it is brought within a particular time period. So suppose if here the passenger has come first, and whenever he has arrived within 1 month, his baggage is dispatched from the other country. Okay, then it is allowed. Acha, similarly, let's say the passenger is yet to come, but his baggage has arrived in the previous 2 months. That is, before his arrival, in the previous 2 months, his baggage has arrived. Then in such cases, it will be considered as unaccompanied baggage, and the same provisions will be applicable. This 2 months time period can be extended by another 1 year. That is, let's say my baggage came, but I could not come within the 2 months time period. Then in that case, this can be extended by a period of 1 year. Example, I was supposed to come within 2 months only, but there was some illness, etc. happened and I couldn't come. Okay, then the next one, that is crew baggage. Okay, what happens in case of crew baggage? In case of crew baggage, whenever there is a crew member, the pilots, then the the other staff who is there on the foreign going conveyance, whenever they come to India, it's not that they can also bring whatever we have studied. Okay, see, because they are traveling on daily basis or on every weekly basis, they are traveling, so we cannot give them the allowance of 50,000 every time. So whenever the crew member of a vessel or an aircraft are coming to India, they can bring items like chocolates, cheese, cosmetics, and other petty gift item for their family or personal use for a value not exceeding 1,500. Okay, up to 1,500 they can bring, not more than that. Okay, laptop, etc. is also not allowed for them. Do you recollect? It was allowed for passengers, it was not allowed for crew. Manageable till here? Yes. Acha, annexure 2 and annexure 3 you need not remember. Okay, but annexure 1 you have to remember it compulsorily. Annexure 1 has firearms. Okay, whenever you are importing firearms, rate of duty will be 70%, heading 9803. Okay, whenever you are importing cartridges of firearms exceeding 50, okay, only when it is more than 50, on the excess portion, okay, on the excess portion, the rate will be 70%. Okay, let's say we are importing 60 cartridges. So 50 will go under your normal calculation, that is your 50,000 general free allowance limit, and on the 10 cartridges, the tax will be applicable at the rate of 70%. Similarly, cigarettes exceeding 100 sticks, cigar exceeding 25, tobacco exceeding 125 grams. Whenever the limits is exceeded, on the excess amount, 70% is the tax applicable. Okay, alcoholic liquor or wine in excess of 2 liter, that is more than 2 liter if you are bringing, then whatever is the excess above 2 liter, on that 70% is applicable. Gold or silver in any form other than ornaments, and flat panel television. Yes, so basically, please remember these these 4 points, especially firearms, cartridges, cigarettes, cigar, tobacco, and alcoholic liquor. Please remember the limits, numbers, etc. Also compulsorily, that only when you're bringing, see, firearms, whatever you bring, it will come under 70%, and this cartridges, cigarettes, etc. Whenever you're bringing this will in excess of the quantity. The excess quantity will be taxed at the rate of 70%. Ma'am, what about the other part? Means what about the first 50? First 50 will go under your general free allowance. That means you will do the calculation and you will see if it is within 50,000. If it is within 50,000, no taxes will be applicable. If it goes above 50,000, then 35% tax will be applicable. But once these limits are exceeded, okay, once these limits are exceeded, the tax payable on this will be 70%. Okay. Please try the questions. Okay, please try the question on this baggage. At least try one question. What I have done is, with this new rate, okay, with this 35% and 70%, I have put the revised calculation file in my Telegram group, that is C Arpita Tulsyan. You can go to the channel. In the channel, just go to the media. In media, just see the PDF files. You will find the revised baggage question answer list, where I have given all the questions plus all the amended answer. So at least give a try to 1 or 2 questions, so that you will be very, very comfortable with that. Yes. Okay, then after that, next one, temporary detention of baggage. Okay, sometimes it can so happen that you have made a declaration. Okay, you have made a declaration in the baggage declaration form. And now when you you cross through the customs counter, the customs officer stops you and tells you that this item is totally prohibited. So I, as a passenger, I did not know that this item is prohibited to be brought into India, but I have still brought it into India. So what does the officer tells me? The officer gives me an option that instead of unnecessarily paying duty on this, what you can do is you can just deposit this with the customs officer, and once you leave India, you can take this item back along with you, or you can arrange to get it exported to your own country. Means, let's say I have brought something while coming to India, I have brought something into India which is prohibited. So instead of paying duty on it, what I can do is I can deposit that item with the customs authority, and when I am leaving the country, I can take those goods along with me. Okay, so this is one of the option given to you under baggage. But in one of the case law, it was decided that this benefit will be given to you only if you had declared that item in the baggage declaration form. Okay, if you had not declared in the baggage declaration form and then you say, oh, acha, this item was prohibited or what? Okay, sir, please deposit it with you. Then they will not deposit. Instead, they will tax that baggage. Okay, but if you have declared something in the baggage declaration form and later the officer tells you that, sir, this is prohibited to be brought into India, then you can deposit that item with the customs authority. Yes, and then section number 81 is very simple, which talks about regulations in case of baggage. That is, the CBIC has got the powers that it can make regulations in respect of baggage. Okay, not very important. Okay, not very important. Fine. So what is more important? What is more important in case of our baggage is the calculation. Okay, please remember, whenever an Indian resident or an Indian origin or a foreigner who was residing in India, whenever they are coming into India, okay, they can bring up to 50,000, all others 15,000. Okay, please remember that. One laptop can be brought extra. Jewelry allowance we have already studied. Okay, jewelry also you can bring only if you have stayed abroad for a period of more than 1 year. If you are shifting your residence, then this is the 60,000, 1 lakh, 2 lakh, 5 lakh. This is the value that you can bring along with you. And whenever you are bringing firearms, cartridges, cigars, cigarettes, alcohol exceeding the limit, then on the excess amount, the tax will be applicable at the rate of 70%. Okay, otherwise it will be taxed. Otherwise, if you fit under the general free allowance, please take it under general free allowance. But if your general free allowance is already exceeded, then tax will be applicable at the rate of 35%. Manageable till here? Yes. So this was all about my baggage provision. Okay, let's start with the next chapter, that is valuation under the Customs Act 1962. Very important chapter from where you are 100% going to get a numerical question. Yes. Now, one thing I want to tell you about this chapter is we will understand the theory. Okay, we will understand the concepts here in this lecture. But what is more important is to practice questions from the valuations chapter. Okay, compulsory practice is required for the valuation chapter, because without practice of questions from this chapter, it becomes very, very difficult to apply the theory. Okay, so what I will do is I will upload the question answers lecture for you on YouTube separately. So what you can do is you can refer the valuations question answers after listening to the theory. Yes, and please try to solve 1 or 2 questions so that it becomes simple for you. Yes. Okay. Let's start with valuations. So now how do we do the valuation? Just like we had valuation under GST, similarly here also we have got the valuation. Valuation is given under section number 14. So normally they say that valuation under customs is going to be the transaction value, that is at whatever price the transaction has been done. Okay, now first we are studying about the import. Okay, first we will study about the import. That whenever we are importing any goods, the actual transaction value, that is the price that we have actually paid or the amount that is payable to the other person for import of goods, that price plus the delivery. Okay, plus any other charges, okay, like freight expenses, transportation expenses, insurance expenses that we have paid for delivery at the time and place of importation. Place of importation is India. So whatever we have paid for bringing the goods till the place of importation, that will be included in the value, and that transaction value will be considered as the value only when the buyer and seller are unrelated and price is the sole consideration. Then only we can trace the transaction value. Okay, so whatever price we are going to pay to that other person plus whatever extra charges we have paid to bring the goods till the place of importation, that will be considered as the transaction value. Okay, so basically in case of imported goods, we pay the taxes on the CIF, that is cost, insurance, freight. Cost is nothing but the actual price that we are paying for the goods, and insurance and freight is the amount that we pay for bringing the goods till our place of importation. So your CIF value will be considered as the total value for the purpose of payment of import duty. Okay, and similarly in case of export, see, in case of export, our responsibility is still the load port. Okay, the place where we are going to load the goods for exportation, our responsibility is still there. So whatever price we are going to receive for the goods, okay, whatever price we are going to receive plus whatever extra price we are going to receive for delivery and delivery at the time and place of exportation. Delivery at the time and place of exportation is our place, is our Indian port. So whatever price we have the other person has actually paid till the load port, that will be considered as the transaction value, that is the FOB value, free on board value, will be considered as the value for the purpose of paying of export duty. Okay, so now as per section number 14.1, what does section number 14.1 say? That if the buyer and seller are unrelated and price is the sole consideration, then whatever is your transaction value, okay, whatever is your transaction value plus some adjustments, this will be the value for the purpose of calculating the custom duty. Yes. So now, what are the other adjustments that we are required to do? So if we are paying any commission and brokerage, if we are paying any engineering charges, design charges, royalty and license fee, cost of transportation till our place of importation, insurance, loading, unloading, handling charges, etc., all these will be added to the price. Okay, because this is the price that we are paying for bringing the goods till the place of importation. So this will be added to the value, and on this value we are required to pay the customs duty. Okay, now can we say this price can be in foreign currency? Okay, whatever we have imported the goods, the price can be in foreign currency. So for the purpose of payment of custom duty, we will have to convert it into INR. At what rate are we supposed to convert it into INR? So in case of imported goods, we have to convert it on the conversion rate which is prevailing on the date of filing the bill of entry. The day when you are filing your first bill of entry, okay, not the corrected bill of entry, the day when you are filing your first bill of entry, on that day, whatever is the exchange rate, okay, whatever is the exchange rate as per CBIC, whatever is the exchange rate as per CBIC, at that rate you are going to do the conversion. And in case of export goods, the day when you are filing the shipping bill or the bill of export, on that day, whatever is the exchange rate as per CBIC, at that rate you are going to get it exchanged. Okay, on that day you are going to do the currency conversion. Please try to understand. We have already studied section number 15. Section number 15 talks about what? It talks about the date when we are going to choose the rate of custom duty. Okay, that is different. And what we are studying here is the date on which we are going to choose the exchange rate. Okay, in whatever question you're going to get on valuation, both of these provisions are going to be tested. So please be very, very careful. Okay, now suppose if for some goods, if the CBIC has already notified the tariff values, means the CBIC has already told that for so and so goods you have to take so and so value for the purpose of paying custom duty, then you cannot apply your own rates. You will have to go as per the tariff values which are fixed. Okay, example, if the customs department says that for gold which is imported, for every 1 gram of gold, for example, for every 1 gram of gold, you have to pay 10,000 rupees of custom duty. For example, if they are telling this, then you cannot apply any valuation provisions, etc., and you will have to pay as per the tariff value only. Therefore, section 14.2 overrides section number 14.1. 14.1 was transaction value, 14.2 is tariff value. So if CBIC has told that so and so goods will be liable for custom duty as per 14.2, so you have to do the valuation as per 14.2. Then going ahead to the customs valuation rules 2007. Now in these rules we are going to study how to do the valuation specifically. Now here there are two important things. One is identical goods and another one is similar goods. Identical goods are such goods which are almost same, okay, which are same in all the respect, means look wise also, characteristics also, quality also, everything is same, but there will be some minor differences which does not affect the value. Okay, and another one, similar goods is the goods which are not alike in all respects, means the look will change, the physical characteristics will change, the use will change. Okay, so similar goods means which totally look same but which has minor difference, and that is identical goods. And similar goods are which does the same work. Okay, two goods are there, these are doing the same work but it does not look same. Okay, then they have given you the definition of related person. The definition is same as that of your GST, just that this difference is coming. In GST, we had studied this as 25%. Do you recollect? See, a legally recognized business partner, officer or directors of one another business, employer, employee, controlling one another, etc. And there we had studied if someone was holding at least 25% control in us. Remember, here instead of 25%, it is 5%. Rest the definition is more or less similar. Okay, ma'am, why are we studying the definition of related person? Because if the buyer and seller are related person, then you cannot adopt the transaction value. That is the reason we are studying the meaning of related person. Yes, now see, now we are starting with our main rules. See what are they telling us. Now in rule number 3, here they are telling that when the buyer and seller are not related, okay, if they are not related, then transaction value can be accepted. If now let's say, let's talk about import. Okay, let's talk about import. The seller is situated outside India, buyer is situated here in India. We both are not related, and there is no restriction on use of goods which is put by the buyer on me. Okay, the seller on me, means the seller is not putting any big restrictions apart from these three. Okay, he is not putting any. These three are allowed. If he puts these three restrictions, that is any such restrictions which is required by law in India, or which limits the geographical restrictions in India, but which does not affect the value in India, value of the goods. If he puts these three restrictions, then it is okay. But if he is putting any other restriction on me for selling the goods here in India, okay, if he is not putting any such restrictions, then it will be considered as if, then it will be considered that the transaction value will be considered as the value for the purpose of paying the custom duty. Price is the sole consideration, means we are not going to pay anything else to that person except for the price of the goods, and we are not going to give any kickback amount to him. Kickback amount means, let's say if I have imported some goods here in India, and after importing I am going to sell the goods here in India. From that sale proceeds, I am not required to share any amount with him. Okay, then in such cases, the transaction value, whatever is the actual transaction value, that will be considered as the value. Acha, but ma'am, what if we both are related? If we both are related, but our value is nearly, okay, our value is nearly the value of the identical goods, the value of the similar goods, or our value is nearly to the deductive value which we are going to study, or our value is nearly to the computed value, means at whatever price we have done the transaction that is near to the market value or which is near to the normal value, then even if we are related, still transaction value can be considered as the value for the payment of custom duty. Yes, acha, ma'am, what if these conditions are not getting fulfilled? Then in that case, you can do the valuation as per rule number 4, 5, 6, 7, 8, 9 in a sequence. Okay, so if transaction value is to be taken, then you can do the valuation as per rule number 3. If that cannot be taken, then start with rule number 4. So first, as per rule number 4, please do the valuation of identical goods. Okay, identical goods are same goods with minor differences. So if identical goods, let's say I have imported this particular AC remote, okay, but we are not able to do the valuation as per rule number 3, then we will have to do the valuation. As per identical goods value. So check if there are identical goods which have been imported into India around the same time. Okay, if the identical goods have been imported into India at the same time, then whatever was the valuation of those identical goods, you can do minor adjustments in that. Then whatever was the value of those identical goods, you can take the value of that identical goods for the payment of custom duty. If multiple identical goods value is available, then lowest value can be considered. Okay, now let's say for example, if you are bringing some, if you have imported some goods for which transaction value is not acceptable, so you will do the valuation as per rule number 4. For rule number 4, you will go and check the value of identical goods. So, when you are taking the identical goods value, then please check the value at same commercial level. Okay, let's say I have imported 1 lakh quantity of a particular goods, but now when I go and check for identical goods, if import has been done for 1000 kgs of 1000 quantity of goods, if import has been done for 90,000 quantity of goods, which value will you take? Can we say there will be huge differences between 1000 quantity and 1 lakh quantity? So don't take this rate. The quantity which is near to our quantity, take that rate. Okay, take that rate for the purpose of proper comparison. Yes, okay. Suppose if identical goods were not imported at that time, then go to similar goods. In similar goods also, check if there were any similar goods which were imported into India at or about the same time, and take the value of those similar goods for the purpose of doing the valuation of your goods. If multiple is available, then please take the lowest value and please do the adjustments, and that will be your value for the purpose of paying custom duty. If rule number 3, 4, 5 is not possible, then go to rule number 7 and 8. Normally, it has to be applied in sequence only. Okay, normally first we will apply rule number 7, then we will go to rule number 8. But if the importer requests to the proper officer, sir, please reverse the sequence. That is, first let me apply rule number 8 and then 7. Then the proper officer, if satisfied, he can allow that. Okay, otherwise normally we will have to go in sequence only. Okay, your numerical examples are given. I will advise you, please go through it once if you have not gone through it. Yes, okay. Now, rule number 7 and 8. Now, let's first do rule number 7 and 8 and then we'll go to 9 and 10. Now, rule number 7 talks about the deductive value. Now, what do you mean by deductive value? Okay, deductive value means you start with some selling price and you try to reach to the cost. That is deductive value. Okay, now in case of deductive value, suppose if you have imported some goods and if you are not able to do the valuation as per rule number 3, 4, 5, then in such case you can go with rule number 7. Now, if whatever goods you are trying to value, okay, whatever imported goods you are trying to value, for that if identical goods, similar goods, etc. are not available, okay, but now if those goods have been sold in India, then can we say at least you have got the selling price available with that, available for those goods. Yes, now those goods are sold at what value? Okay, those goods are sold at what value? At what price? Okay, at what price? That price can be taken for the purpose of valuation. Okay, but now see what are they telling? The value of imported goods shall be based on the unit price, means price per product, unit price at which the imported goods or identical goods or similar goods are sold in greatest aggregate quantity. Means highest quantity is sold at what rate? That rate will be considered. That rate will be considered for the purpose of doing the valuation. Okay, let's say for example 100 quantity was sold at the rate of 10 rupees. Okay, then 200 quantity was sold at the rate of 10 rupee. Then 300 quantity was sold at the rate of 8 rupee. Then 500 quantity was sold at the rate of 10 rupee. Okay, now see, just combine at 10 rupee, how much quantity was sold? Can we say at 10 rupee, 800 quantity was sold? At 10 rupee, 800 quantity was sold, and at 8 rupees, 300 quantity was sold. So at what rate highest quantity was sold? Can we say highest quantity was sold at 10 rupees? So this 10 rupee will be considered as the value price per product. Okay, price, the unit price for the purpose of calculation of value for the purpose of payment of custom duty. So the unit price at which the greatest aggregate quantity has been sold, that rate will be considered for the purpose of doing the valuation. Yes, but from this price you can do the adjustments. What adjustments will be done from this price? So can we see this is the selling price in India? So whatever were the expenses which were incurred in India, like the transportation incurred in India, commission which is incurred in India, customs duty, can we say in this selling price custom duty would also have been included? So subtract the custom duty, further processing expenses, any expenses. See, basically we are going backwards now. Selling price is already in India. You took the greatest aggregate quantity selling price in India, then you have to go reverse and you have to reach up to the price at the customs port. That price will be considered as the value for the purpose of paying custom duty. Okay, example is given here for the greatest aggregate quantity. So that is about your rule number 7. And then if rule number 7 is not possible, then you will go to the rule number 8, that is computed value. Computed value is cost plus method. That is whatever is the cost incurred, okay, whatever is the value of material, labor, etc. incurred in producing the imported goods, plus the normal profit that we generally add for selling the goods, for exporting the goods to India. Okay, so basically here this method, see here this is not our cost, this is the cost which will be incurred by the seller. We are importing the goods, so the seller is sitting outside India. You have to take his cost plus normally the profit that that person adds while selling the goods into India. Okay, that will be considered as the selling price. Okay, so generally this method will be used when buyer and seller are related. Okay, otherwise who will share his cost details with the importer here in India? So only when the buyer and seller are related, then the buyer can ask the seller about his cost and the profit element, right? And that price will be considered as the computed value on which you are required to pay the customs duty. Yes, if this is also not possible, then residual method will be applied. That is the proper officer. That is best judgment method will be used. Okay, best judgment method will be used for doing the valuation. And then rule number 10 we are yet to do. Rule number 11 talks about declaration by the importer. That declaration will, the importer will always give a declaration that he has done the, while doing the valuation, he has, considered, he has given all the accurate details and whatever information etc. is required, he has considered all those information. This declaration will be given by the importer. Yes, and the next rule, that is rule number 12, which talks about rejection of declared value. Sometimes it can so happen that whatever, if the proper officer is not satisfied with the value which I have declared, then in such cases the value can be rejected by the proper officer, and then the proper officer will do the valuation of your. Yes, and last rule number 13, which talks about interpretative notes. That is, whatever rules we have studied, to interpret those rules, there are some notes given. You can use those notes and do the interpretation, not very important. Okay, so this was all about your import valuation rules, except for one rule, that is rule number 10. Rule number 10 is very, very important from your exam point of view. Please do try the questions. I am repeating again and again. Yes. Acha, now before doing rule number 10, let's understand it once again what we have studied. So normally when the buyer and seller are not related, okay, and if there is no major condition which is put by the seller on the buyer for selling the goods into India and price is the sole consideration, then we can take the transaction value plus we can do the adjustments. Acha, even if the buyer and seller are related, but the actual value actually corresponds with the similar goods, identical goods, computed value deductive method, then we can take the transaction value along with all the adjustments. If rule 3 is not possible, then we will go as per the identical goods method. If that is also not possible, we will go with similar goods method. Okay, then if that is also not possible, then normally you will go with rule number 7. Rule number 7 is your deductive method. That is, you will start with the selling price minus the profit, cost, etc., minus the cost, etc. in India. If that is also not possible, then you will go with the computed value method, that is cost plus profit method. And if that is also not possible, then best judgment assessment. But if you request to the proper officer, then he can allow you to first apply rule number 8 and then apply rule number 7. Yes. Acha, now going on to the last rule, that is rule number 10. Rule number 10 talks about the cost and services. Okay, it talks about the cost and services. Now, whenever you are calculating the transaction value, okay, whenever you're calculating the transaction value, some things are required to be adjusted, okay, to the price actually paid or payable for the imported goods. So whenever you are importing any goods, what was the transaction value? Transaction value was the price that you have actually paid for importation plus the cost incurred up to the place of importation. So if there is any expenses which is incurred by the buyer, that is, we have paid for that, but that price, that amount was not included in the basic price. Example, buying and commission and brokerage, except for the buying commission. Okay, please remember this, buying commission is never to be added in the value. So any other commission and brokerage, any other like cost of containers or cost of packaging, if this has been incurred by us but that was not included in the price, then please add it to the value. That is also included in our CIF, on which we are required to pay the customs duty. Similarly, any amount which was the responsibility of the supplier, okay, any amount which was a responsibility of the supplier but which has been met by the buyer, means buyer has actually incurred from our pocket but it was a responsibility of the supplier, like any material, component, parts and similar item which I have provided but it was his responsibility to provide, or any other tools, dies, molds, similar items, or any other materials which is used in this imported products, or any other engineering, development, artwork, design plans, etc., for which I have paid, but provided these development, etc., has been taken place at any place outside India. Okay, so if I have paid for any engineering charges, any artwork charges which has been done outside India, but buyer has paid, whereas it was the responsibility of the supplier, then even that has to be added to the value. Then similarly, if there is any royalty or license fee which I have to pay to the seller, even that has to be added to the value. Or if there is any subsequent resale price which I have to pay to the seller after the goods come to India, or any other payment, any other obligation which I have to pay to the seller which is not included in the value, all these things will be added in the value for the payment of, for the purpose of payment of custom duty. Okay, so that is included in which rule number? That is included in rule number 10.1. Okay, I have repeated again and again in our question answer. Rule 10.1 is separate. Okay, any expenses which have been met by the buyer which was the responsibility of the supplier, that will always be added in the value. Okay, then rule number 10.2 basically talks about transportation, loading, unloading, handling charges up to the place of importation. That is the first one, and second one is cost of insurance. So first one is 10.2A and next one is 10.2B. Okay, so now whenever we are incurring any expenses relating to transportation, loading, unloading and handling charges for delivery up to the place of importation, that is up to the Indian port, that will be added to the value. Ma'am, how much will be added to the value? So see, that is given here, rule number 10.2A. So if the goods are imported by ship, by vessel, then if the actual cost is known, actual cost, please add it to the value. If the actual cost is not known, then 20% of the FOB value. Okay, 20% of the FOB. FOB means what? free on board, that is before adding the insurance and freight, whatever is your free on board value. Free on board value is the value till their port, okay, till their port, till the place of exportation. 20% of the FOB, that will be the deemed cost. If you do not have the FOB value but you have FOB plus insurance available with you, then no problem, take 20% of that as your 10(2)A cost, that is your transportation, loading, unloading and handling, all of it taken together. But if the importation is done by air, okay, if the importation is done by air, if the cost is known, then please compare either the actual cost or 20% of the FOB, whichever is lower. Okay, means basically you have to restrict it up to 20% of FOB, only that much has to be added to the value. And if cost is not known, then my answer is going to remain the same, that is 20% of the FOB value. Or if you don't have the FOB but you have FOB plus insurance, so FOB plus insurance multiplied by 20%, this is the value which I have to add. Okay, this is the value which I have to add. Manageable till here? Yes. Okay. Now listen, now another point which is coming up here is about if there is any transshipment which is done in India, that is the goods have come from outside India to one port in India, and then from one port in India it is going to go to another port, please do not include that. Okay, please do not include that in rule number 10(2)A, or please do not include it in your CIF. So whatever is your delivery expenses till the first place of importation, just add that much. Okay, whatever expenses are incurred in India due to transshipment, on that you are not required to pay any customs duty. Yes, and the next one, last one, that is rule number 10(2)B. 10(2)B talks about the insurance expenses. So whenever we are importing the goods, insurance is mandatory, right? So if the actual cost is known, take the actual cost. If actual cost is not known, then the deemed cost will be 1.125% of the FOB. But if you do not have FOB, but you have FOB plus that transportation expenses under rule number 10(2)A, then whatever value you have available, take 1.125% of the same. Okay, these are added to the value. But these expenses up to where? Only up to the place of importation. Okay, suppose if the goods have come into India and then you have insured the goods, then that insurance is not to be added here. Only till the place of importation, whatever is your insurance value, that you are going to add here. Okay, so this was majorly all about your valuation, import valuation provisions. Nothing very important. Okay, now please try to understand. I have already told you this, and this is the circular which they have given you about the transshipment cost. So if there is any transshipment expenses incurred, that is if you are transporting the goods from, you are shifting the goods from one port to another port, from one airport to another port in India. Okay, or if you are shifting the goods from one port to the inland container depot or something like that. Okay, then in such cases, that is the cost which is incurred in India. Okay, that is the cost which is incurred in India. So please do not include it for the purpose of calculation of custom duty. Okay, now if you do not know, then just please try to understand what is this inland container depot and container freight station. So inland container depot is nothing but a custom station. Okay, it is just like a port. So here, this is the place where basically unloading and loading of goods etc. happen. So this is considered as a custom station altogether, and container freight station is just an extension. Okay, container freight station is just an extension of this container of this inland container depot. So basically whenever the custom station is very congested, if the inland container depot is very congested, then they allow you to keep the goods in the container freight station. So container freight station alone does not have any legal validity. So main custom station is going to be the inland container depot, and if this is totally congested, then you shift the goods to the container freight station. Yes, okay, anyway, so this was all about our import rules. Then similarly we have got the export rules also. Export rules, we have got 1 or 2 questions on export valuation. Generally import is tested, yes, but you never know when your ICAI can test this. Anyway, so normally they say that in case of export, on some goods export duty is payable. So the transaction value will be considered as what? Transaction value will be considered as the value for the purpose of paying customs duty. And here always in case of export, please remember, we are not concerned about the delivery expenses, insurance expenses after our exportation. So whatever is the price that we are going to get, okay, whatever is the price that we are going to get up to our load port, the place where we are going to load our goods, whatever is the amount that we have charged till there, that will be the FOB value, and on that value we are required to pay the customs duty. So normally transaction value will be considered if the seller and buyer are unrelated, and this price is the sole consideration. Acha. Now here they are telling that even if the buyer and seller are related, but price, okay, price is the sole consideration, then also transaction value is accepted. So here related, unrelated doesn't matter. Most important thing is if price is the sole consideration, then the transaction value can be considered as the value for the purpose of payment of custom duty. Okay, if that is not possible, then you will apply rule number 4. Okay, in rule number 4, how will you do the valuation? Here they are telling determination of export value by comparison. That is, if like kind and quality goods have been exported to other buyers in the same destination country or another destination country. That is, now I was exporting it to A country. Okay, so if I have exported it to some other person in the A country, or if that is not available, if I have exported it to another person in B country, at whatever price I have exported, you can do the adjustments in that for the commercial levels, etc., date of exportation, etc. Do the adjustments, and that value can be taken as the value for the purpose of payment of custom duty. If that is not possible, use the computed value. You are the exporter, so you will be having the cost of manufacturing of those goods. Add the normal profit to that. That will be the value for the purpose of payment of custom duty. If that is also not possible, then use the residual method. That is the best judgment assessment method, and do the valuation and pay the customs duty. Manageable till here? Yes. Acha. Now see, I have given the summary here. For the purpose of export, first try the transaction value. If that is not possible, then check the export of like kind and quality goods. If that is not possible, then use the computed value method. If that is also not possible, then use the best judgment assessment method. Okay, then which dates rate of duty do we take? So can we say, as per section number 16, which we had studied in our first chapter, the day when the let export order was passed by the proper officer, that dates custom duty will be taken for the purpose of payment. Conversion rate, just now we saw which dates conversion rate? The day when we are filing the shipping bill or the bill of export, that dates conversion rate, and which is given by the CBIC, that will be taken. So this is basically the conclusion of your export. If you remember this much for your exam, it is sufficient. Yes. Okay. Rest of the things you can just read it once. Yes. Mainly, this is majorly what is important from your valuation chapter point of view. Now, this was all about the theory. Okay, we have done it from theoretical point of view, but I request you, please go through at least 2-3 questions from the valuation chapter, so that you will be able to try the question. The question that is going to come in the exam, that is going to be a simple question, but provided you have solved it once. Yes, it is going to be from your question bank only. Okay, the questions which, like I told you, I'm going to upload the video. The question is going to be from there, that only. Okay, but you need to solve it once. Yes, so as I have told you, I will upload it separately for you, so that you can just refer it once for your simplicity. Yes, okay, so this was all about our customs portion. Okay, FTP I will cover it in a separate video, but this was all about our customs. Here we have covered our levy, classification, types of duty, valuation, importation, exportation, warehousing, and refund. Yes, all our customs chapter have been completed here. See, so you must be knowing, na, customs and FTP is of 20 marks, right? And out of that, generally you get one question on FTP of 4 to 5 marks. So basically 15-16 marks is going to be from customs. Yes, so please focus on amendments. Provisional assessment has got amendment. Yes, please focus on refunds under customs. That is important, because this chapter also has got amendment. And generally one question from valuation you get, and one question from baggage we generally get to see. And baggage, because of the revised corrigendum, now the rates are very, very important. So just be very, very careful about it. Yes, I hope you were able to revise the entire customs provision in an effective manner. If you liked the lecture, please let me know. Thank you so much.